YouTube લાઈવ બી ચાલુ થઈ ગયું છે આપણું YouTube
Oh. Pratik bhai, can we start? Well, I feel that we should not.
Convener साहब अभी जोड़ाना ना थी आशुतोष त्रिवेदी.
Okay. Because I feel that we should not penalize those who have come in time. You know, that is my philosophy.
Convener साहब ने थोड़ा को technical problem था जी हम logging करे थे हमने 2 मिनट में login.
Fair enough.
आगे ये तो बस सीधे start करी दे.
Done.
क्या बात है समझता है सेकला जी late जोड़ाना चाहिए.
हाँ वांदो नहीं, but that is what I said that we should not penalize those who are in time. Otherwise, then it's not fair.
Because of the technical problem, Ashutosh Trivedi, the convener of Bhiwandi CPE Study Circle, is unable to join. He should not join the lecture whenever we get connected. So we start now the lecture seminar. So hello friends, good morning everyone and all. My name is CA Pratiksha. I am the Deputy Convener of the Bhiwandi CPE Study Circle. I welcome you all for the 11th webinar of the Bhiwandi CPE Study Circle. I also welcome the Mr. Manmohan Bajaj, Manish Gada, Girish Agrawal, Sushil Agrawal, and all the respected members from the Bhiwandi CPE Study Circle. And this week we had a birthday of the birth anniversary of the two legendary person. It's one of the Mahatma Gandhi and the second is Lal Bahadur Shastri. And today's topic is audit of private limited company. What are the things which we have to take care during conducting the audit of the private limited company? There will be a CARO Compliances. And we have a very, very special speaker for today. He is the Vice Chairman of WIRC of ICAI, Vishal Doshi, sir. Welcome you, sir. Thank you for accepting our invitation to the Bhiwandi CPE Study Server. We are honored that you are present here and providing us your valuable things. If anyone having any types of queries, I request you to please write it down in the chat box. And friends, we all know about Vishal Doshi, sir. We will know him in more details. So I request Sakshi Agrawal to please give the introduction for the today's speaker. Sakshi, over to you.
Hello. Am I visible? Hello, am I audible?
Yes, Sakshi, you are audible.
Okay. Hello and good morning, everyone. Here, Sakshi Agarwal. Today, I feel very privileged and honored to have this golden opportunity to introduce a man of professional wisdom and strong administrative and organization skill. Has made a noteworthy contribution in whatever capacity he serves the profession. Truly dynamic and intellectual personality, CA Vishal Doshi, sir, Vice Chairman of WIRC of ICAI. Apart from being qualified chartered accountant since 1996, he also holds and possesses other qualifications like DISA and DRRM. He is currently the Vice Chairman of WIRC of ICAI and also the Chairman of Ind AS Accounting Standards and IFRS Committee and Branch Coordination Committee. And he is also a committee member in various committees at WIRC. Currently, he is partner in KC Mehta and Company, Chartered Accountant, Vadodara, heading the audit and assurance practice. He specializes in statutory and tax audit and has a deep knowledge of controls like internal control, budgetary control, and information system control. He also has a vast experience in due diligence, valuation of business, and share exchange ratio. Not only that, he is also a very fabulous mentor and faculty on Ind AS, RFRS, auditing, and accounting standards. Companies Act, CARO, enterprise risk management, and many more technical and non-technical topics. And also a visiting faculty to postgraduate course at MS University, Baroda. He is also associated with Pearl Review Board, Financial Reporting Review Board, and many more. He is also awarded Rashtrapati Scotch Award by Shri K.R. Narayan, Honorable President of India. He is also appointed as an expert member on Board of Studies in Accounting and Financial Management by the Maharaja Sayavji University of Baroda. His continuous contribution to various roles in WRC committees is huge. Now, with immense pleasure, may I request CA Vishal Doshi, sir, to please continue with his wonderful and knowledgeable session. So let's welcome one of the eminent speakers, CA Vishal Doshi, sir.
Good morning, friends. Thank you, Sakshi, for those kind words of introduction. I take this opportunity to thank Ashutosh Bhai and Pratik Bhai, the conveners and deputy convener respectively, for inviting me and giving me this opportunity to meet and interact with you all. I feel, friends, this is a boon that this lockdown has given us, the virtual meetings, that even myself from Vadodara, who otherwise, might not have been amongst you all if these would have been physical meetings, that we are able to interact and share our knowledge and experience, and also the various aspects. So I'll just share my screen now for the presentation. I would request if the members can switch off their mics of their laptops or devices so that there would be no disturbance to the participants. Yeah, so friends, the topic that we are going to discuss today is the do's and don'ts in company audits. Based on my experience, I would share some of the aspects, especially with respect to the private limited and the smaller entities, smaller companies. And so what the whole session of about 2 hours, what I would be doing is that for the first initial 1 hour, 15 minutes, we'll discuss the presentation. Then maybe like Pratik bhai suggested, we can have a few question and answers. And then friends, I will share with you some of the Excel tools which we use with respect to the company audits and how to ensure better compliance, or I would say better quality as far as the company audits is concerned. Then I would share with you which might help you for your audits and your compliances. So company audits, friend, is, as we all know, is governed by the Companies Act, and therefore it is the much more or the most regulated sector as far as the operations of the companies are concerned, and also as far as the audit requirements are concerned. We are aware recently that there have been a lot of microscopic interest in the role of auditors. Definitely that is with respect to large companies, but I would not rule out, especially in case of the private limited, and with more and more compliance getting electronic, the government or the machinery can always throw up certain queries. And we are aware that the MCA has also started issuing notices on various non-compliance with respect to the financial statements that ought to be reported but are not reported or incorrectly reported. So I would try to cover some of the aspects. So before the audit, what are the things that we need to check? First is with respect to the appointment letter and filing of the ADT1. With the rotation in place, with the appointment period of 5 years in place, this has become very relevant. See, earlier what was happening is that we had an annual appointment, and therefore it became a process by which के हर साल अपने को appointment letter देना है और वो file करना है. But अभी क्या हो रहा है that because of this new 5-year policy, appointment policy, we have to keep a track के अपॉइंटमेंट लेटर कौन सी कंपनी का 5 साल कब कंप्लीट हो रहा है और उसका रिन्यूअल या फ्रेश अपॉइंटमेंट लेटर, and if that company is covered under the rotation, then whether that 2 cycles of 5 years each, whether it has been completed, and all those things we need to keep a tab on it. See, why I am saying we need to keep a tab on it. We are all professionals, a very small group of members, and let me be very candid. I am aware that for most of the private limited companies, a lot of activities and hands-holding is done by us as professionals. Though we are auditors, but when we extend our services beyond the audit, and therefore I am saying that this is something where we need to keep a tab. कि कौन सी कंपनी का अपॉइंटमेंट या रीअपॉइंटमेंट ऑफ ऑडिटर या रोटेशन ऑफ ऑडिटर कब भी हो रहा है. We need to keep maybe a control sheet, an Excel file or whatever. If there is a change in auditor, we need to communicate with the previous auditor. This is very important. हम लोग कभी बोलते हैं कि ये छोटी कंपनी है, छोटा क्लाइंट है, पार्टनरशिप फॉर्म है, कुछ भी है, अभी क्या होगा, क्यों होगा. Friends, please don't take these things lightly. Communication with the previous auditor, वो आप जैसे भी situation में आपका appointment हुआ है as a new auditor, the code of ethics requires that you have to communicate with the previous auditor, and you must be aware that now they have even permitted communication by email. with the previous auditor to take their objections, or what we normally say as the NOC. So please ensure that there is no compliance on this part. Otherwise, once if at all somebody, see, you never know under what situation you have been appointed, and if the previous auditor has any grudge and or any fees which are outstanding, then all these things, communication, it becomes necessary. The third important thing is engagement letter. Again, यहाँ पे मैं देखता हूँ, especially with respect to the small and medium practitioners, that somehow we give it a miss. And engagement letter, हम लोग बोलते हैं ये standards on audit का requirement है जो client पे या किसी पे applicable नहीं है, and we normally take a miss, we bypass it, saying कि engagement letter नहीं हुए तो चलेगा, आज तक किसी ने देखा नहीं है. This is what is our impression. But friends, let me tell you कि engagement letter बनाना बहुत ही जरूरी है, mandatory है. Standards on audit is mandatory on chartered accountants and auditors, we are all aware. And engagement letter is the first and foremost document which you must have before you start any audit. Engagement letter बनाने में 5 मिनट से ज़्यादा नहीं लगते हैं, and therefore I believe, see, if you should have a standard template of engagement letter, and you should prepare engagement letters for all your clients. अगर 5 साल का आपका अपॉइंटमेंट है तो ऐसा नहीं आपको एंगेजमेंट हर एक क्लाइंट के लिए हर एक साल में बनाना पड़ेगा. You have the option, you have the liberty that you can have it every 5 years. मतलब आपका जब रीअपॉइंटमेंट हो तब तक के लिए सेम अपॉइंटमेंट एंगेजमेंट लेटर वुड कंटिन्यू, या फिर कोई लॉ में चेंज आया हो, मैनेजमेंट की साइड से चेंज है, ऐसा कुछ मेजर चेंज है, then you go for a fresh engagement letter. Otherwise the existing engagement letter would continue. So if I talk of companies, whenever you get a appointment or a reappointment, at that time you have to sign the engagement letter, because that is a fresh engagement that you are being given by way of that appointment, and therefore engagement letter is necessary. My earnest request to all members of Bhiwandi study circle is that please don't take this thing lightly. Ensure that you have an engagement letter. See, engagement letter, why I'm saying is important, it is like a contractual understanding between the auditor and the auditee. एंगेजमेंट लेटर अगर आप देखेंगे जो स्टैंडर्ड फॉर्मेट भी है इन द स्टैंडर्ड्स ऑन ऑडिट, एंगेजमेंट लेटर में the roles and responsibilities of the management is very clearly defined with respect to maintenance of books of account, with respect to preparation of financial statements, with respect to the accounting policies and everything, and also giving you access to all the documents and everything, to their facilities, to their offices, to their shops, godowns, whatever it might be. It also, if you include a limited liability paragraph, then in an audit it also gives you that flexibility, or it gives you that to what extent is you are liable in case there is any negligence or a misconduct on your or your team's part. So these are some very important contractual terms and understanding, and therefore I'm saying engagement letter is a must. Then you have the memorandum and articles of association. Again, why I'm saying ये important इसलिए है that many of the provisions of the Companies Act, if you see, they can be applied only if it is permitted by the articles of association. So therefore the articles of, so having the memorandum articles, the latest copy of it after all the amendments is pretty very important, because let us say, I say private limited company, abhi dividend aa gaya hai, dividend mein people feel that it's going to be a higher tax bracket, they might want to go up for something like a buyback. Now buyback, one of the first conditions is that the buyback of shares should be permitted by the memorandum and the articles of association. So therefore it is important that you must have the memorandum and articles. Materiality limits, like I said, some of the tools that I would be sharing. So in this also materiality limit, I will show an Excel file. Why it is important? Because especially क्या होता है, private limited companies की हम लोग जब बात करते हैं, तो प्राइवेट लिमिटेड में हमारी टीम जो है उसका काफी टाइम जाता है इन लुकिंग एट सम ऑफ द मैटर्स विच आर इनसिग्निफिकेंट. अगर हम वाउचिंग की बात करें, लेजर स्क्रूटिनी की बात करें, तो काफी कुछ ऐसा होता है 200 रुपए का वाउचर का क्वेरी है, 500 रुपए का वाउचर का क्वेरी है. नाउ वेदर एक्चुअली दैट इज रिक्वायर्ड टू बी ऑडिटेड, इफ ऑडिटेड वेदर वो क्वेरी के लायक है या नहीं है. सो वी एज प्रोफेशनल, सी बिग फोर्स, you have always observed that they go on the materiality कि चलो इसमें 5 करोड़ की आइटम है तो वो insignificant है, immaterial है, 5 करोड़ की आइटम भी in case of definitely the company would have a turnover of 10,000 crores, but then 5 crores is something they consider as immaterial and they let it go by. So similarly, we can scale down to that extent कि भाई अगर 5,000 से कम का कोई item है तो उसको हम लोग query नहीं लिखे, and by this what happens, we save a good amount of time of our team and efficiency also, and we are able to get a better return for whatever are our investment in terms of time and the quality. The last item on this is compliance checklist. Friends, इसमें भी I will share a tool, but क्या होता है compliance checklist से, what I'm trying to say that when we talk of a private limited company, there are so many compliances we need to check. First is from an accounting standards perspective, whether it is SMC or non-SMC, मतलब large company है या small company है, वो एक आता है. फिर उसके बाद CARO applicable है, नहीं applicable है, internal audit applicable है, नहीं applicable है, CSR applicable है, नहीं applicable है, rotation of auditors applicable है, नहीं applicable है, whether requirement of company secretary is there, whether cost audit is required in case manufacturing. If cost audit is required, then whether you need to do the so cost accounting record पहले तो maintain करना applicable है या नहीं है. If those record are to be maintained, then whether audit is. So there are n number of compliances, and the unfortunate part is that for each type of compliance, the threshold limits are that are given are different. So if you ask me, it becomes humanly impossible to keep a track. So here also I will share a tool, an Excel file which we maintain, by which we keep a track. And इसमें क्या है कि ये लिमिट्स जो है वो हर एक साल चेंज होती रहती है. नॉट इन द लॉ में लिमिट जो है वो तो स्टैटिक है, स्टैग्नेंट है, बट जो लिमिट इसमें जो है विथ रिस्पेक्ट टू दी थ्रेशोल्ड्स, टर्नओवर है, बोरोइंग्स है या जो भी है, वो एवरी ईयर क्लाइंट की चेंज होती रहती है और उसके बेसिस पे कंप्लायंस चेंज होता है. एंड आई कैन अश्योर यू फ्रेंड्स दैट मेनी टाइम्स वी वुड बी मिसिंग आउट कि लास्ट ईयर CARO नहीं था, अभी इस साल से CARO एप्लीकेबल हो गया है, and we still don't give CARO because last year CARO नहीं था, इस बार नहीं दिया है, and then we continue. So this would also help. So but all these things, before we start the audit, we should keep all these things ready. During the audit, accounting standards, definitely that is important and relevant with respect to the compliance levels that are there. So recognition, measurement, disclosure, like I said, SMC है, non SMC है, जो भी है उसके related, we need to ensure that we are doing the proper compliance with respect to the accounting standards. Just I'll say something like a related party. Now related party is something which is applicable whether it is a company or a non-company. So you just need to see to it that you need to ensure that you are following the compliance. Now something like a segment reporting. Segment reporting is applicable to a non-SMC, मतलब a large company, but not applicable to SMC. So in this way we have to check the compliance with the accounting standards and ensure that the disclosures are made adequately. Standards on audit, I already discussed that this is mandatory for the auditor, and I would request the study circle that जितना भी attendance हो आपके meeting में, please ensure that every quarter आप at least एक webinar रखें या physical meeting जब भी हो. Standards on audit पे आप एक meeting once every quarter. I would earnestly request the study circle, please ensure उसमें चाहे 10 ही participant हो, I would not mind at all. But even for those 10 people, I would suggest that you should have a meeting. Don't go on numbers, go on the need of the members and the requirement of the law. Compliance with Companies Act, Income Tax Act, Labor Law compliances, and internal financial controls over financial reporting. So during the audit, we need to check and verify all these things. Friends, now moving forward, Schedule 3, you must be aware that now there are 3 parts to Schedule 3. And Schedule 3 जो है, it typically talks about what are the disclosure requirements with respect to the profit and loss account and the balance sheet. Collectively, I might say, with respect to the financial statements, Companies Act की क्या requirement है, that is what is in Schedule 3. So Schedule 3 Division 1, what we have are the accounting standards, which are the non-Ind AS accounting standards जो हम लोग apply करते हैं for a majority of the private limited companies, closely held limited companies, the non-listed companies I would say, और जिसका net worth 250 करोड़ से कम है. So all these would come under the Division 1. So Schedule 3 Division 1 applies to such companies. Schedule 3 Division 2, it applies to the Ind AS companies. तो आप जब भी कोई डिस्क्लोजर को चेक कर रहे हैं, प्लीज इंश्योर दैट यू रेफर टू द राइट डिविजन इन शेड्यूल 3 एंड डिविजन 3 इज फॉर NBFCs विच आर अंडर इंड AS, जो अभी एप्लीकेबल हुआ है इंड AS टू NBFCs, तो उसके लिए शेड्यूल 3 डिविजन 3 है. So this is how the segregation is and we have to ensure proper compliance with the respective divisions. हम लोग जब audit कर रहे हैं तो the requirements of the act and the standards will prevail over the schedule. So if the accounting standards require certain disclosure requirements which are not there in schedule 3, then also we would be required to make the necessary disclosures because the accounting standards would prevail over the schedule. Unit of measurement. Friends, here also I would say that I have seen that many times जो हमारे वो ट्रायल बैलेंस शीट टैली या उसमें से एक्सपोर्ट होता है, उससे फाइनेंशियल स्टेटमेंट्स बनते हैं. एंड व्हाट आई हैव सीन इज दैट मेनी टाइम्स जो हम लोग PL बैलेंस शीट बनाते हैं वो डेसिमल्स में होते हैं, अंदर के नोट्स होते हैं उसमें डेसिमल्स नहीं होते हैं, या तो कोई पर्टिकुलर लाइन आइटम जो है पूरे आपके डेसिमल्स होते हैं, बीच में कोई होता है विच इज विदाउट अ डेसिमल. So please ensure that you give a proper disclosure with respect to the rounding off. तो अगर आप decimals में दे रहे हैं then each and every you can do a select all. Excel में ही बनाते हैं select all करके comma format देके you can ensure that there is a proper compliance with it. And further आप notes में या कहीं पे भी amount quantify करते हैं तो उसका भी जो unit of measurement है that has to be same as you have in the main financial statements. So small and medium companies, we discussed that there are certain relaxation with respect to a few standards on SMCs. So which type of companies that get classified under a small and medium company, which are not listed or which are not in the process of listing? Those are SMCs, which is not a bank, financial institution or an insurance companies. Those are the SMCs. कंपनीज जिसका टर्नओवर 50 करोड़ से ज्यादा नहीं है इन द इमीडिएटली प्रीसीडिंग अकाउंटिंग ईयर. फ्रेंड्स, ईयर ऑल्सो हम लोग जब लिमिट्स की बात कर रहे थे कंप्लायंस चेकलिस्ट की, we said that there are different limits and different criteria, and the funny part is that in some of the criteria the threshold is to be seen with respect to the preceding accounting year. In some of the criteria we have to see the threshold with respect to current year. In certain cases of borrowings, what we have to see is the threshold which is the maximum during the year, and so it is very dynamic. So when we talk of turnover, it does not exceed 50 crores in the immediately preceding accounting year. Borrowings in excess of rupees 10 crores at any time during the immediately preceding accounting year. So borrowings, even डायरेक्टर से भी लोन ली है तो वो भी इसमें गिना जाएगा. इट इज नॉट नेसेसरली ओनली फ्रॉम अ बैंक और फाइनेंशियल इंस्टीट्यूशन. Any borrowings, including public deposits, if it is in excess of 10 crores at any time. So year end का balance देखने से ये classification पे नहीं चलेगा. You have to see at any point in time during the year. And अगर वो 10 करोड़ से कम है, then it would get classified as a small and medium company, and which is not a holding or subsidiary of any of the above. Now all these 5 criteria have to be fulfilled. It is not कि मेरा turnover का criteria 50 करोड़ से कम है, I would classify come under the SMCs. That is not the scenario. All these 5 should be met, then only it would be classified as small and medium company. Small and medium company, now how, see, like we said, we discussed कि every year ये change होते रहता है. So what I am trying to say is that if it is, now let us say a company is a small and medium company for the financial year 18-19, right? Now for the financial year 18-19, that company is SMC. When you do the classification and everything, 19-20 mein it becomes a non-SMC. Now, so what happens in such a case? It is not that 19-20 mein immediately you would be able to get the benefit of less number of standards or less number of compliance. You have to see that for continuous 2 consecutive accounting years, that company, you have to see that for continuous 2 accounting years, that company has to qualify to be a SMC. Then only it can take benefits of the less number of disclosure requirements of the accounting standard. तो अगर 18-19 में नॉन SMC है, लार्ज कंपनी है, तो 19-20 और 20-21 2 कंसेक्यूटिव ईयर वो SMC क्लासिफाई होती है. then only it would be eligible to follow the SMC standards. So this is what it says. But the reverse, अगर SMC से non SMC होती है, large company होती है, तो immediately all the standards, all the disclosure requirements would apply. Then there is no transition phase कि भाई 2 साल non SMC रहे, ऐसा कुछ नहीं है, वो immediately apply हो जाएगा. Friend, another thing which I find is that we are missing in case of SMCs is the disclosure requirement. We have to give a disclosure in the notes to accounts stating that the company is a SMC as defined in the general instructions in the AS, and accordingly the company has complied with the accounting standards as applicable to a small and medium sized company. This statement is mandatorily required for all SMCs that you have with respect to the disclosure requirement. So अगर SMC है तो notes to accounts में last में before you sign off you have to ensure that this paragraph, this sentence is printed and it has to appear. It is a mandatory requirement, optional नहीं है ये. Before we start the audit, the initial document requirement. So I say not before, it is immediately on starting the audit. When you go to the client's place, आपको start करना है, तो there are some things which you must have at the beginning of the audit. This is that list. The first thing is with respect to an organogram, authorization matrix, contact persons. हम लोग बहुत बार ऐसा बोलते हैं कि भाई प्राइवेट लिमिटेड कंपनी है, वी आर अवेयर, कोई चेंज नहीं हुआ है, इट्स फाइन, बट इट्स ऑलवेज बेटर टू हैव द लेटेस्ट. वहाँ पे कोई अकाउंटेंट चेंज हुआ हो, सी, एंड डोंट लिमिट योरसेल्फ ओनली टू द अकाउंट्स एंड फाइनेंस डिपार्टमेंट. आपके सेल्स वाले हैं, मार्केटिंग वाले हैं, कमर्शियल परचेज वाले हैं, फैक्ट्री रिलेटेड कोई है, जो भी की पर्सन है उसका आपके पास ऑथराइजेशन मैट्रिक्स और ऑर्गेनोग्राम आपके पास होना चाहिए, एंड दैट आल्सो अपडेटेड फॉर दैट ईयर. तो दिस टुडे आई वुड बी स्पीकिंग मोर ऑफ फाइनेंशियल ईयर 1920. उसमें प्रोडक्ट्स है, लोकेशन है, ऑपरेशंस, कैपेक्स, कुछ भी चेंजेस जो भी हुआ है वो एट द बिगिनिंग ऑफ द ईयर आपके पास वो डिस्कशन हो जाना चाहिए कि क्या क्या हुआ, सो दैट यू कैन प्लान एंड परफॉर्म योर ऑडिट अकॉर्डिंगली. अगर कोई बहुत बड़ा कैपेक्स है, कोई प्लांट एंड फैक्ट्री नया लिया है, सो यू नो दैट यू विल हैव टू फोकस मोर ऑन द कैपिटलाइजेशन and the borrowing costs if there are any, rather than on the routine cash vouching and all. So this can help you plan the audits effectively. Whether there are any addition, liquidation or change in the status of entities in the group. So this is with respect to consolidated financial statements. कोई नई acquisition किया है, कोई subsidiary नहीं बनाई है, या कोई दूसरी कंपनी है जिसमें 20% से ज्यादा इन्वेस्ट किया है, by which it becomes an associate, and therefore the preparation of consolidated financial statements becomes mandatory. Then we have master data from MCA website. This is also very important because that gives you the full list of आज की डेट में कौन, who are all the directors, what is the authorized capital, what are the charges that are there, वो भी MCA website से मिल जाता है. So that gives you when you start the audit, that gives you a feel about what are the activities that have happened in the financial year 1920. Computation of total income and return for the previous year March 19 का, because आपने जो provision for tax किया है और सामने जो file किया है उसका जो भी difference है, that has to be adjusted. There might be a excess provision you might need to write back, or if it is a short provision you have to provide, but then that should also be with you. Minutes of board and general meetings. Friends, this is one area where I feel that we really need to ensure compliance. I would suggest that you can put your hand on your heart and ask yourself that in how many of the private limited companies actually you have go through the minutes of the board and general meetings. I know you would say, Vishal bhai, ये तो सब हमारे ऑफिस से ही होता है तो हमको सब पता होता है. I agree, I appreciate, I have no doubts on that. But when you look from an audit perspective, please forget everything else. Behave like an auditor. वो चाहे आपके बाजू के कैबिन में आपका पार्टनर जो है वही ROC का compliance करता है. I don't care, I don't mind. I am an auditor and therefore if I need this, I need this. See, इसमें क्या होता है? One is that जो भी resolutions many times we have seen कि वो borrowing करते हैं, limits enhance करते हैं, बैंक से कुछ नया purchase करते हैं. So they give extracts of the board resolution, they give to that company, that NBFC entity, whatever it is. और हमको बहुत बार पता भी नहीं होता है. And especially so where either ये ROC related activity in house हो रही है कंपनी के वहाँ पे, या कोई और कंपनी सेक्रेटरी को उन्होंने आउटसोर्स किया हुआ है. So in such cases we have to ensure that we please insist that आप जब start करते, let us say, तो आप अभी start कर रहे हैं, आप बोलिए कि भाई 19-20 की जो भी minutes है बोर्ड की जनरल मीटिंग्स की, वो minutes हमको चाहिए. वो जैसे वो उनका डायलॉग है ना अजय देवगन का, you know, that अभी के अभी, something like that. You have to insist that these are, and आप अभी के अभी बोलेंगे तो आपको 15 दिन के बाद मिलेगी. This is what is my experience, and therefore I would request, please don't take these things lightly. You might find yourself on the wrong side of a signature if you don't do all these compliance. Similarly, statutory registers, share transfer हुए हैं, if there is a change in the registers, the change in the shareholding or any such thing, all these things would be there. MBP1, related party disclosure is mandatory. Like I said earlier, SMC है या non-SMC है, related party disclosure is mandatory, and therefore, see, MBP1, I know private limited company में नहीं करते हैं. Let me be very honest. I know I can share with you, I can put myself in your shoes, but we insist that MBP1 is a mandatory requirement, because you don't know कि जो डायरेक्टर है उसने और कौन सी कंपनी में क्या इन्वेस्ट किया है, क्या उसका जो शेयर होल्डिंग है उसका. So all these things come up in MBP1, and therefore you must insist. See, even I'm saying that even if your office, if you are doing the compliance work, you are to prepare MBP1. अगर आपको prepare करना है तो आपको करना है, and you have to put it on record. You must be aware that MBP1 की requirement है at the beginning of the year. The directors have to give the disclosure of their interest in other entities. So you have to, अगर 19-20 financial year की बात कर रहे हैं तो 31st March 19 या 1st April 19 को ये MBP1 the directors have to sign and give it to the company. This will help you in your related party disclosures and all the necessary compliance. And trial balance also, you must have the opening trial balance. Opening means when you are starting the audit जब आप open कर रहे हैं उसका ट्रायल बैलेंस आपके, उसके बाद शायद आपके पास 10 ट्रायल बैलेंस और आएंगे. I don't deny that, I don't challenge that, but you must have the first trial balance in place so that you are able to track what are the changes that are being made or that are happening subsequent to the initial trial balance, and whether when you do that we look up, और आप जैसे भी मैपिंग करें कि भाई आपका जो फर्स्ट ट्रायल बैलेंस था और बाद का जो ट्रायल बैलेंस है कितने चेंजेस हुए हैं, कहाँ पे हुए हैं. बिकॉज लेट अस से टैली वुड बी अ मेजॉरिटी, जो इसके सॉफ्टवेयर, जो क्लाइंट्स के सॉफ्टवेयर टैली में कंट्रोल्स नहीं रहते हैं, बैकडेट में भी कुछ भी चेंज हो सकता है, और आपने ऑडिट भी कर लिया है तो उसके बाद भी कोई अप्रैल में जून में जाके चेंज कर देता है, एंड यू हैव लॉस्ट ट्रैक. So that is why it becomes important that on that date the trial balance soft copy हो, hard copy हो, कुछ भी हो आपके पास होना चाहिए, so that you are able to keep a track कि भाई बाद में कौन कौन से changes हुए हैं, if they are significant or if they are material changes, then whether it is as per your audit query, आपने जो query raise की है उसका rectification करने के लिए उन्होंने वो डाला है, या it is a new transaction which they have come to know post your audit and without your knowledge they have passed the entry. So you know it is very important that you have that trial balance with you. Friends, these are some of the ROC forms which we insist at the beginning when we start the audit. जैसे MBP1 मैंने discuss किया detail में. These are the others which you must have, I believe, with respect to the charges, registration of charges, modification of charge, satisfaction of charge, कितनी subsidiaries है, MSME के half yearly return, because MSME also I'll be taking up separately during this presentation. You have the return of deposits, whether there is any violation. See, companies जो return file करती है उसमें violation वो लोग नहीं दिखाएंगे. But during the course of your audit, you must be aware at least they will be showing the list of the micro and small enterprise जिसका आप scrutiny करके you can find out. Then you have the return of allotment, the filing of resolutions to the registrar, AGM related जो report है, books of account address कहाँ पे maintain होते हैं, appointment of directors, annual return. See, all these things, this is just an illustrative list. You can definitely add to this. आप remove भी कर सकते हैं अगर वो client में applicable नहीं है. But my request would be कि आप जब ये audit start कर रहे हैं, ये आप list client को दे दीजिए कि भाई इतने मेरे को forms ROC related जो है वो आप मेरे को soft में या hard में मेरे को दे दीजिए, and you keep it on record. So this is what is my request and requirement. Now, friends, going further, about the classification of current and non-current, like I said, I will take up some of the key aspects only of the audit, not going through all the accounting standards or the full schedule 3. Inventories अगर non-moving, slow-moving भी है, then it would still be classified as a current only. There would be nothing like a non-current, because if it is expected to be consumed or realized within the company's normal operating cycle, then even if it will not be consumed in 12 months after reporting date, still it would be classified as current. Second is with respect to a liability. Again, I'm saying because because of this COVID and this pandemic, there are a lot of these restructuring and moratorium or वो सब discussions हो रहे हैं. RBI is coming out with various schemes to help the businesses. Now let us say 31st March को आपके client की कोई loan outstanding है, which subsequently they have entered into that moratorium, that restructuring which the bank has agreed and accepted, your client has also agreed and accepted, and they decide that ये जो 12 March 20 में, if there is outstanding, if there is any default, then that would not be considered as a default. Then I would also take cognizance of that events occurring after balance sheet date for conditions existing as on the balance sheet date. COVID was there as on 31st of March. Lockdown was there as on the 31st of March. So these were the conditions which were existing as at the balance sheet date. And subsequent to that, because of these conditions, there has been this restructuring, this moratorium, this hands holding by the banks, whatever it might be. And therefore, I would be able to take, though suo moto, the client did not have an unconditional right to defer its settlements, but the bankers have also agreed, the RBI has permitted that, and the company has agreed to defer the settlement, and therefore that will have to be classified as current. A company also needs to classify its employee benefits obligation. So अगर आप AS 15 देखेंगे तो उसमें actual valuation is mandatory. There are certain disclosures which are not mandatory for SMC, but actual valuation is required. And in such case, you have to do the classification between current and non-current. See, bonus वगैरह जो भी है वो always current में ही जाएगा because वो 12 months में pay कर देना है. But as far as leave, gratuity, all those provisions are concerned, it's not that सब जो भी liability आ रही है वो 12 महीने में pay करने की है या beyond 12 महीने pay करने की है. So when you look at the actual report, please ensure that the actuary has given that bifurcation between current and non-current to you, so that you can reproduce that and make the necessary suitable disclosures in the financial statements as a current and a non-current. Share application money. Again, this is an area for private limited companies which they use as a tool to borrow money. पहले तो काफी rampant था, but now with the Companies Act 2013, there has been a lot of controls, or I would say compliance requirements with respect to share application money. So share application money in the financial statements, if 31st March को outstanding है, so it has to be presented between shareholders fund and non-current liabilities on the face of the balance sheet. वो कोई नोट में या शेड्यूल में नहीं जाएगा, फेस ऑफ द बैलेंस शीट में आपको शेयर एप्लीकेशन मनी डिस्क्लोज करना है. सेकेंड इज दैट एप्लीकेशन मनी जो आप फेस पे डिस्क्लोज करेंगे, दैट इज ओनली टू द एक्सटेंट इट डज नॉट एक्सीड द इश्यूड कैपिटल एंड इट इज नॉट रिफंडेबल. अगर वो शेयर एप्लीकेशन मनी रिफंडेबल है तो आपको उसको अदर करंट लायबिलिटीज में दिखाना है. एंड ऑल्सो यू हैव 4 टाइप्स ऑफ कैपिटल, ऑथोराइज्ड, इश्यूड, सब्सक्राइब्ड एंड पेड अप. नॉर्मली हम लोग 2 ही दिखाते हैं, ऑथराइज्ड एक दिखाते हैं और दूसरा इश्यूड, सब्सक्राइब्ड एंड पेड अप. यू हैव टू एंश्योर, स्पेशली इन केस ऑफ शेयर एप्लीकेशन मनी, बिकॉज आपने शेयर एप्लीकेशन मनी जब लिया है तो आपने उसको इशू किया है, देयर माइट नॉट सब्सक्राइब नहीं हुआ हो या पेड अप नहीं हुआ हो, ये आपको ध्यान रखना है. 31st मार्च को आपने बोर्ड हैज अग्रीड टू इशू लेट अस से 10,000 इक्विटी शेयर्स और 1 लाख इक्विटी शेयर्स ऑफ 10 ईच. तो आप जब बैलेंस शीट बना रहे हैं तो ऑथराइज्ड आपका आएगा, इशूड आएगा which would be that 1 lakh rupees extra than the normal, and then you would have subscribed and paid up which would not contain that 1 lakh क्योंकि अभी तक वो सब्सक्रिप्शन आया नहीं है. So see, these are some things because अगर आपने बोर्ड ने रिजॉल्व भी कर दिया है कि इसको मेरे को शेयर कैपिटल इशू करना है, राइट, बट वो शेयर होल्डर्स को राइट्स इश्यू या जो भी इशू है उसका पैसा 31st मार्च तक नहीं आया है. So 31st मार्च के पहले बोर्ड ने रिजॉल्व कर दिया है कि दिस इज टू बी इशूड बट देयर इज नो सब्सक्रिप्शन व्हिच हैज बीन इनवाइटेड. देन आल्सो एज ऑन 31st मार्च यू हैव टू शो दैट इशूड कैपिटल आपको उतना ज्यादा दिखाना पड़ेगा और सब्सक्राइब एंड पेड अप आपको सेपरेट दिखाना पड़ेगा. नाउ इफ द इशूड कैपिटल इज मोर देन ऑथराइज्ड कैपिटल, देन अगर आपको पैसा आया है then to that extent आपका जो excess है between the authorized and the issued, that is the amount that you have to show under other current liabilities. You have received that money and there cannot be shown as a share application money. And then there are various disclosures under equity or current liabilities with respect to share application money. काफी disclosure requirements है. Please go through the schedule 3 and ensure that you make all those disclosures. The Companies Act 2013, it gives you 60 days. It gives you 60 days to allot the shares against the application money received. If you don't allot the shares within 60 days, then you have to refund the money within 15 days. 15 दिन में आपको refund करना है, और वो भी 60 दिन के बाद अगर आप refund कर रहे हो, तो you are liable to repay that money with interest at 12% per annum after the 60th day. तो अगर आप 70th day में दे रहे हो, तो आपको 10 दिन का उसको 12% लेके आपको ब्याज देना है. And let us say if you don't repay within 75 days, you don't refund the application money, then from 76th day it would be considered as a deposit under the acceptance of deposit rules. And as you are aware that this would be violation of these rules, because you cannot take accept deposit from individuals or any such thing as per the rules, and therefore this would violate those acceptance of deposit rules, and there would be consequential penal provisions that would be applicable. Going to borrowings, friends, what Schedule 3 stipulates that you should specify the nature of securities separately in each case. You know, a blanket disclosure of different securities covering all loans. So, you know, you have different securities covering all different loans. So you cannot say that all the above loans are secured by way of mortgage of, you know, the inventories or immovable property and the trade receivables or whatever. So you can't give such blanket disclosure with respect to the security. You have to give a single disclosure for each and every borrowing. You have to give कि भाई इसके सामने क्या आपने security दिया है. Where one security is given for multiple loans, let us say immovable property है जो mortgage की है और उसके सामने term loan भी लिया है और cash credit facility भी लिया है. So you can club it together. You can give that the you know, term loan and the cash credit facility are secured by way of mortgage or hypothecation of the immovable property, but you have to do a proper cross referencing, because cash credit जो है वो आपका जाता है current में, आपका जो term loan है वो जाएगा maybe current and non current depending on the repayment schedule. So you cannot, you have to map that, you give that reference that for security referred so and so. तो आप जब term loan का देते हैं, you can say that for this security referred note 12 or cash credit के नीचे आप security का, but whatever way you present, but that you have to give that cross referencing कि कोई security देखे तो उसको पता चले कि ये security कौन-कौन से loan के against में है, और जो भी loan वाला study कर रहा है उसको पता चले कि उसके सामने कौन सी security है. Friends, many times we have seen in case of private companies that the promoter है या director है जो भी है उसके personal securities होती है, घर होता है as immovable property या stocks and shares होते हैं, which they mortgage, which they pledge, and against that the company takes the loan. So you know, it is a private pledge for the loan being, borrowings being taken by the company. In such case, this would be classified as a unsecured loan, because company की कोई भी asset pledge की हुई नहीं है, and therefore this would get classified as a unsecured loan. And but at the same time, the security that has been given, that has to be disclosed by way of the note, that what exactly has been given over by way of security against that party. So it would be classified as unsecured borrowing, but it would still be having the disclosure with respect to the security of the promoter or the director that has been pledged. Disclosure of repayment terms. I have seen that we make all are making proper disclosure, but just one point, that prepayment. समझिए हमारा टर्म लोन है जो let us say 50 months का टर्म लोन है और अदर 60 months 5 years का टर्म लोन है, and monthly installment जाता है. Now let us say for 2 months the company as at March 20 उसने prepayment कर दिया, कुछ cash flow positive था, interest burden कम करने के लिए उसने prepay कर दिया. Now because of that prepayment, but there has been no change in the sanctioned terms with respect to the number of EMIs or the amount of EMI. But now when we as auditors, when we are giving that what are the amount of installments which are pending as at the balance sheet date, then we cannot suo moto reduce those 2 installments of prepayment. अगर सैंक्शन टर्म है कि मेरे एज ऑन 31st of March 2020 में 60 मंथ्स की लोन थी, मैंने ऑलरेडी 12 मंथ का दे दिया है, तो 48 मंथ्स इज व्हाट रिमेन्स एज पर दी सैंक्शन टर्म्स. नाउ मैंने 2 महीने का प्रीपेमेंट कर दिया है, तो आई माइट हैव 46 मंथ्स रिमेनिंग एज पर द एक्चुअल वर्किंग. But since there is no change in the terms that has been there, this would still continue. I have to report whatever is pending. Why I'm saying is that let us say वो 2 महीने का जो benefit है, subsequently somehow there is a cash flow issue and he has prepaid, so he for 2 months he may decide not to pay because he is already prepaid. वो banks या NBFC वो भी agree हो जाता है कि हाँ ठीक है सर, आप prepaid, आप वो मंथली 2 इंस्टॉलमेंट आप स्किप कर सकते हैं क्योंकि आपने प्रीपे किया है और हमारा एनपीए फिर भी ये अकाउंट एनपीए नहीं होगा. सो देन द ओरिजिनल ड्यू डेट एज पर सैंक्शन टर्म वुड अगेन गेट रीइंस्टेटेड एंड देयरफॉर you as auditor should ensure that you make the disclosure as per the sanction terms, even in case of prepayment. We need to disclose defaults in the repayment of loan and interest. So only these disclosures of default have to be given. अगर समझिए स्टॉक स्टेटमेंट नहीं दिया है या इंश्योरेंस नहीं लिया है या if there is some other default to the terms and conditions, those are not required to be disclosed as per schedule 3, only with respect to repayment of loan and interest. We have to give the details of default existing as on the balance sheet date. तो इसका मतलब कि अगर during the year कोई default है which has been made good by 31st of March, in such a case we don't have to make any disclosure with respect to such defaults because they have been corrected as at the balance sheet date. So this is with respect to borrowings. Now we move forward with respect to the exempted deposits. With respect to exempted deposits, intercompany deposits are exempt, so I will not take time on that. Receipts from the director, relative of director out of own funds. Now this out of own funds is a mandatory requirement. Now friends, जब हम लोग ऑडिट करते हैं तो हम लोग को पता नहीं होता है कि डायरेक्टर है, रिलेटिव के डायरेक्टर है, they might not give their bank statement कि वो source of fund क्या है. So what we do as a practice is that we ensure that we take a declaration from the person who has given the loan, from the lender, director है या उनके relative है, उनसे हम लोग sign करके declaration लेते हैं that the money that they have given to the company are out of their own funds. So please ensure that this documentation you keep on record to ensure compliance with the acceptance of deposit rules. Compulsory convertible debentures which are convertible within 10 years, these are unsecured. So unsecured debentures अगर आप issue करते हैं for borrowing, then they have to be compulsorily convertible. You cannot have a redemption against that. उसको आपको equity में convert करना ही करना है. Then only it would be an exempted deposit. Otherwise, it would not be an exempted deposit. Secured debentures, अगर you are issuing secured debentures, that they can be optionally convertible, compulsorily convertible, or non-convertible also. तो अगर debenture secured है, तो आप उसको कोई भी option में convert या repay कर सकते हैं. Promoters contribution because of borrowing में stipulate किया है, समझिए बैंक से borrowing लिया है, हम लोग CMA data बनाते हैं, उसमें भी show quasi capital. तो ये जब CMA data होता है उसमें then the banker से कि ठीक है आपका अगर इतना capital, though not as a issued capital, but ये loan आपको fix रखना पड़ेगा, you will not be able to withdraw this money because that is forming part of your capital or your contribution towards the business. Now please ensure this is considered as an exempted deposit provided there is a stipulation of the bank or lending institution. आपको ये ensure करना है कि बैंक का जो sanction आता है उसमें इसका specific reference होना चाहिए कि this much of amount that the promoters or the directors have brought in या जो भी loans है outstanding in the books, they would not be eligible for withdrawal till this loan continues. This has to be stipulated in the sanction terms and then only it would be considered as an exempted deposit. And mind you that this would be considered an exempt deposit only till that loan is cleared. एक बार लोन क्लियर हो जाता है then it would no longer remain exempted deposits और आपको ये प्राइवेट से भी जो आपने लोन लिया है which was stipulated to be retained, that also you will have to repay, otherwise there would be a violation of the acceptance of deposit rules. business advance deposit, advance for supply or goods or services supplied within 365 days. अगर आपको एडवांस आया है और वो 365 डेज तक आप एडवांस रख सकते हैं without violating the deposit rules. But if it goes beyond 365 days, then there is a violation. So you have to ensure कि आपके debtors account में जो भी credit balances है, that money you have received by way of advance, and you have, whether that has been more than 365 days है या नहीं, वो आपको scrutiny के time आपको check करना है. If it is for more than 365 days, then it is a violation. आपने चाहे उसके बाद उसको गुड्स दिया है, सर्विस दिया है, कुछ भी है, बट एक बार तो वायलेशन हो ही जाता है. सिमिलरली अगेंस्ट इमूवेबल
Doshi sir, your voice is, we cannot hear your voice. There is a technical problem from the Vishal Doshi sir. He will soon be joining the seminar. I request to a 5-minute break for the members. We are taking a 5 minutes break till the time the speaker will join.
The members are requested to be online. We will be resuming shortly in 5 minutes. I request all to be with us. Please be with us. We will be resuming shortly. The members are requested to please be with us.
Speaker sir had arrived.
Welcome back, sir. Attention, everybody. Now we are about to start the session.
So we are fortunate enough to have the members from South region from Chennai. They are unable to understand the Hindi, Vishal sir. So I
Sure. My apologies to them. If they have not been able to understand, but now I'll ensure that I'll speak only in English. I'll keep my video off because I have somehow my the Wi-Fi has decided not to let me connect, and I am through my mobile hotspot. So just to save on the bandwidth, I'll keep my video off. I'll share my screen now. Yeah. So is the screen visible?
Yes, sir. It is visible, sir.
Great. Thanks. So sorry for the inconvenience, friends. We move on. So we were under the deposits, under the acceptance of deposit, and so we were discussing about what are the permissible deposits from members, from the shareholders. So when we talk of the startup company, they can borrow from members to any limit for 5 years from the date of the registration as a startup. If it is a private company other than startup, then there are 3 conditions which are to be met. If they are met, then they can borrow without any limit from the members. In case those conditions are not met, then they can borrow from members only up to 100% of the paid up capital, free reserves, and the securities premium. So this is as far as the private companies are concerned. Public company, if it is in an international financial service center company, then 100% of the paid up capital, reserves, and securities premium. If it is an eligible company, then 10% of that, and in any other case, it is 35%. So these are the relaxations. If you remember, when the 2013 Act came, there was a complete ban on acceptance of deposits from members, and then subsequently they have brought about these relaxation. So what are those 3 conditions which we would all be interested in knowing? And friends, all these 3 conditions have to be met. Even if one condition is not met, then the company would not be able to borrow from members to any limit, but it would be restricted to 100%. So what are the 3 conditions? The first is that the company is not an associate subsidiary of any other company. The second is borrowing from bank, financial institution, or any body corporate. It should be less than twice of the paid up capital or 50 crores, whichever is less. So let us say there is a private company which has a paid up capital of 10 crore. Then up to 20 crores, if it has any borrowing from a bank, financial institution, or body corporate, then it would be eligible. But if it is more than 20 crores, then this condition would be violated. Why I'm saying is because recently in one of my clients' case, I came across this situation where they wanted to borrow from members, and they had already an intercorporate deposit. They already had an intercorporate deposit, which comes under the definition of body corporate, which was more than twice of its paid up capital, and therefore it was not eligible to borrow from members. Not borrow, what I mean to say is borrow any amount. It can still borrow up to 100%. And the third is that the company has not defaulted in the repayment of such borrowings subsisting at the time of acceptance of deposit. So these 3 conditions, I tell you, when we talk of private limited company, basically, predominantly, my experience is it is the second condition which we have to look into. The first and third are normally satisfied. It's just the second condition. So if the second condition is satisfied, I'm going back. So if you see, if all the 3 conditions are met, then we can borrow from members without any upper limit. Provision versus liability. I know, friends, you might be feeling that, yeah, Vishal bhai, what are you talking? Provision, liability, we are all aware, and there is no difficulty as such. Friends, I would just like to say that this is one area where we make a small technical error. What we do is that in the ledgers, wherever the word provision is used, somehow our team members, they pick that up and put it as a provision. That is not so the case. If you see the 3rd paragraph, I'll read that so that you are in sync with what I'm saying. Provisions can be distinguished from other liabilities such as state payables and accruals, because in the measurement of provisions, substantial degree of estimation is involved with regard to the future expenditure required in settlement. Now let us say there is something like a provision for audit fees. Can anybody tell me what is the substantial degree of estimation involved in future settlement? There is hardly anything. You might negotiate, I don't deny that. But as such, when we say a substantial degree of estimation means there is a lot of ifs and buts into it when you are making or identifying that liability. And that is what it requires. So all those amounts are provisions where they require a substantial degree of estimation. Otherwise, they are very much a liability. Second thing is, when anything that you classify under provision, you have to ensure that in the provisions, you have to show the whole movement. Provision ka, what was the opening balance? What was the additional provision made during the year? What from the opening balance, what is the amount that has been paid during the year? From the opening balance, again, what is the amount which was no longer required, which has been written back during the year, and what is the closing balance? So this whole movement that has to be disclosed if it is a provision. In case of a liability, you don't have to disclose that. So I'm just taking some of the amounts or categories which are normally part of our financial statements, whether it is a liability or a provision. Audit fees, like I already discussed, it is a liability. Provision for expenses, again, it is a liability. Let us say there is some repairs and maintenance expense, or there are some expense with respect to traveling, or some expense with respect to some reimbursements. So there is no estimation involved in any of these things, or I would say a substantial degree of estimation, and therefore this would still remain as a liability and would not get classified, although ledger name might contain the word provision. Warranty, again, warranty provisions like two-wheelers are you buy two-wheelers, you buy four-wheelers, you buy television sets, all those things you are aware. So I am saying from the seller's perspective, there are these warranty provisions. Now in that, you don't know that what would be the liability or the expenditure which that entity would be incurring because of the warranty of 6 months or warranty of 1 year or whatever it has been given. So in such case, based on the past practice, that what are the past liabilities, how many
I think audio stopped.
Yes, there is a problem with the audio, sir.
Vishal, sir, please,
am I
yes,
audible
sir.
now?
Yes, sir. You are audible, sir.
Yeah.
Yes,
Because
sir,
I
yes, sir.
received that message that somebody had muted me, so I thought, let me just cross check. Fine, no problems. Yeah. So let's continue. So warranty provisions. So there is this estimation that you would require based on past trend and what has been the actual expenses incurred vis-a-vis what was the warranty provisions. You come at 2%, you come at 3% as the amount, and based on the sales and whatever is the open period for the provision, for the warranty provision, you will make a provision. So see, if you understand, there is a substantial degree of estimation that comes in our warranty provision, and therefore it is a provision. Bonus, again, you are paying 10%, 15%, 20%, and there might be some minor variation here and there, but it is more of a liability rather than a provision. Leave gratuity, again, it is a provision because there is a lot of estimations with respect to the salary increase, with respect to the retrenchment rates, with respect to the inflation, with respect to the interest rate, the discount factor. These are all assumptions, and therefore there is a substantial degree of estimation, and these are provisions. Doubtful debts, this is again an adjustment against a trade receivable. We don't classify it as a provision or a liability. Income tax, again, this is a liability because for March 20, when you are making a provision for tax, you already know what is the law, you already know what are the deductions and exemptions which are available, you already know what is the tax rate that is applicable. So what is the estimation in that? There is hardly any estimation, and therefore it would be classified as a liability and not as a provision. So please ensure that we keep that in mind, the phrase substantial degree of estimation. If that is there, then there is a provision, otherwise it is a liability. Coming to the asset side, friends, first I would like to say that this standard name of fixed assets with effect from 2016 has been changed to property, plant and equipment. So my suggestion is that wherever you are having your significant accounting policies or notes or disclosures, if you are using the term fixed assets, kindly change it to property, plant and equipment. Second is that depreciation accounting AS6, it has been withdrawn on 30th of March 2016. So under significant accounting policies, if we are doing a copy paste from the earlier years that, this is as per AS6, depreciation is provided on the WDV or SLM or whatever, then please change that, because AS6 is, there is no such standard as AS6 currently, and that becomes technically incorrect. The third thing is that because of this change in AS10, what we used to give earlier, I don't know what practice is being followed presently, but we used to give, like we have the block of assets schedule. In that we say, let us a plant and machinery. Under the gross block, we would say opening balance, additions, adjustments, deletion, closing balance. Similarly, for the depreciation block, we would say opening, depreciation during the year, reversal or adjustments, and then closing. And then we have two columns of net block as at 31st March 20, as at 31st March 19. This is how we used to give. And in the last, we would say previous year, and then opening balance whole previous year, additions whole previous year. That is how we would have a structure. I think most of you would still be following that. But now it has changed that the additions, disposals, acquisitions, everything that has to be shown separately. And for each line item, for all items, you have to show this movement. Therefore, my simple request would be pick up the financial statements of any good listed company, see what is their schedule with respect to the fixed assets, the disclosure, do a copy paste and follow similar, because now that is what the Ind AS standard more or less is now the AS standard, and therefore the disclosure requirements are also similar. So you can do a copy paste of that. The last is about component accounting. I think everybody is aware of that. In case, I will not dwell much. In case you have any questions on that, we will take it up in the Q&A session. Unbilled revenue versus work in progress. Again, this is something very important. This is required where either you are following the percentage of completion method, the POCM, or where you are billing at fixed intervals, but that is not coinciding with the period end. So let us say you are billing 15th of every month, or let us say mobile companies, all of us know that they have those 4 billing cycles, right, every month. That on the 7th, on the 10th, on the 15th, on the 27th, whatever, that these are the billing cycles. So they need not always, they would not end as on 31st of March. So these are the situations where we need to understand to show unbilled revenue or WIP. Those who are under GST practice, I think most of you would be, you are also aware that under the GSTR 9, I am not a man of GST, you can correct me, you can pardon me for if I am using any wrong numbers in that, but in the GSTR 9 also you have this reconciliation where unbilled revenue is a part of it. Now, what is the difference? First, I will discuss between unbilled revenue and WIP. I will say 2 things. One is unbilled revenue is as good as your sales, but you have not billed it, and therefore the profit element is included in that amount. Whereas WIP is like your inventory, and therefore it would be at cost or NRV, whichever is lower. There is no profit element into it. The second significant difference is with respect to the disclosure. Unbilled revenue, your entry would be typically, you would have a receivable debit to unbilled revenue. Unbilled revenue will show as your part of your income. The receivable also, it would be under other current asset. It is not your trade receivable. Why is it not your trade receivable? Because you have not yet invoiced it. So it would remain as your other current asset, and when you invoice it from other current asset, it will move to your trade receivable. Whereas WIP, it will form part of your inventory. So these are the basic difference between unbilled revenue and WIP. Now I'll spend some time on the 4 conditions. That if any of this condition is satisfied, which means that you have to consider it as unbilled revenue and not as a work in process. So first is that the customer simultaneously receives and consumes the benefits provided by the entity. So like we took the example of mobile company, I'll continue with that they have given you bandwidth, they have given you the voice over or whatever, you have consumed it, and therefore there is nothing that they would come back to them. We talk of electricity companies also, you have a billing cycle which might be 10th or which might be 15th of every month. Sometimes it is bi-monthly for a small residential units, which might not. So the electricity company has provided us electricity, which as a consumer we have consumed, right? So in such case, for the electricity companies, for the mobile companies, whatever is the revenue from the last billing date till 31st of March, that would be classified as unbilled revenue, and it will not be WIP. It will be with profit because that has already been consumed by us as a consumer. The second is the entity's performance creates or enhances an asset that the customer controls as the asset is created or enhanced. Let us say I am owning a plot of land, right? And I have asked the contractor who is going to make a building for me, a 4-story building for me, but the land is mine. So I have given him just the contract for construction. So he would follow AS7 percentage of completion method. Now, let us say as of 31st of March, he has constructed up to the first floor. Now, the land is owned by me. I am controlling that land and even that building also to the extent constructed. Therefore, the contractor, for him, whatever material or labor that he has put inside this for him is not inventory, because he does not own this. I am the person who is owning the land. I am the person who is controlling the asset. And as and when the floor gets built up, I am the person who gets the value, the enhanced value of that asset getting created. In such a situation, for that contractor, whatever money is due by me to him, which has not been billed, that amount would be considered as unbilled revenue for that contractor. The third is that the entity's performance does not create an asset with an alternate use to the entity, and the entity has an enforceable right to payment. So this I will explain by way of an example, that these are the make to orders. Let us say I have asked my vendor to prepare a tank for me. Right now, that tank is unique, a chemical tank, because it has some particular outlets and some particular inlets based on my factory structure, design, and everything. And I have asked him to prepare that particular, construct that tank for me. Now, that manufacturer, for him, that tank has no alternate use because it is very specific for my use, my requirement. And so, if he has constructed 50% of that tank, and the contractual terms are such that he can ask for me, he has a right to receive 50% of that work, though he may not have billed me. But if required, if I say that that I don't want this tank, then he has a right, enforceable right to me for that 50% of the work. In such situation, because it is a make to order, he has no alternative use to it, and he has an enforceable right to payment. It would be whatever he has constructed would be for him unbilled revenue. And he has to take it in his books accordingly. The fourth condition is that if an entity determines that another entity would not need to substantially re-perform the work that the entity has completed to date. Now, let us say for that tank, I will continue that example, that tank, 90% I have said that you have to prepare the tank. Now, then that tank would come to my premises, and the top of the tank, the cap of that tank, because it has a lot of inlets, outlets, I say that would be another technical team in my factory who would be doing that welding and all those things, right? So if that manufacturer, he determines that, whatever work he has done, when it comes to my factory, my premises, it would not be required to be substantially re-performed. So whatever has been done is complete, and he has to deliver it for me to complete the remaining, to satisfy the remaining performance obligation to the customer, or I might be the person who might be installing it. In either case, if there is no re-performance of work to be done, then that would be unbilled revenue. So any of these four conditions to be satisfied, unbilled revenue will be recognized. Friends, Incoterms 2020, this I will not spend much time in the technicalities. I would just say that XWorks, Free on Board, CIF, DDP, these are the normal terminologies. Then it is very, very important for you to understand what are the roles and responsibilities of the seller and what are the roles and responsibilities of the buyer. That is one. And second is when the risk transfers, because 31st March cutoff date, these are something very, very important. See, it works both ways. Many times, when we talk of private limited companies who don't have any borrowings and all, they want to save on tax, they might want to defer the revenue recognition, whereas it might be very much possible that the revenue has to be recognized. Second is that private limited company, they don't want to have those reconciliation or the differences between the GST returns, because the invoices have already been raised and the revenue that you are recognizing in the financial statements. So they say that GST return I have shown X amount, and therefore in my financials also X has to be there. That is not the case. As an auditor, you have to fulfill the transfer of significant risk and reward criteria for revenue recognition. And if you are not able to satisfy that, there are these reconciliation items in the GST return which you have to explain to your clients, and I'll tell you I have done that. I have explained to clients that these are the reconciliation items because the government also knows there would be difference between the generation of invoice and recognition of revenue. I give a very simple example. Chartered accountants, we follow accrual basis as far as the GST is concerned, and we follow cash basis as far as accounting is concerned. So this is something very similar. There can always be a timing difference. So this table, this chart shows that when the risks get transferred, the orange band is the responsibility of the seller. The blue band here you can see against each of the criteria Incoterms is the responsibility of the buyer. Now, at many places, at least I would say at two places, you would see that or four places rather, that the cross mark is where the risk goes from the seller to the buyer. That cross mark does not actually coincide with the responsibility change. So this we have to be very, very clear that at what point in time the risk goes from the seller to the buyer, and that is the time when revenue should be recognized. So this chart, I'll share this presentation with you. You can refer to this, but this becomes a very, very important cutoff procedures. Loan to directors. So there is a strict prohibition in case of individuals and firms taking loans from companies. So a private limited company cannot give loan to any director of its holding company, partner of the director, relative of director, firm in which any director is a partner. So these are the conditions, these are the criteria where there is a blanket ban. There is a very strict prohibition in case of advancing to such entities or individuals, firms or individuals. But then there is some relaxation in certain cases, that if a special resolution is passed and the borrowing is for the principal business activity of the borrowing entity, then the company can give loan or guarantee to any private company where director is a director or member. So these are the conditions. I will not go into detail, but you need to examine them whenever there is any advance that is given to a director or any company where the director is interested, or firm when director or relative is interested. You have to ensure that you go through the provisions of section 185 and 186. And on loan and investment, again, there is a ceiling that you can give only up to the extent of 60% of the paid up capital reserves and securities premium, or 100% of the free reserves and securities premium, whichever is more. This is the cap, that all your total loans and investment, whatever the company has given, the private limited company has given, this is the cap. It cannot give beyond this. MSME, again, friends, I have seen in most of the private limited companies, we normally bypass this, saying that that they don't have any information with respect to which are the MSME, and now with the MSME definition undergoing a significant relaxation, and more companies are registering themselves as MSME, and our responsibility as an auditor, it has increased manifold. In fact, I was surprised to find that some of the vendors in the invoice, they normally see, earlier we had this audit procedure wherein we used to tell our client that you communicate to all your vendors and you tell them that if you are registered, then kindly submit your registration certificate. And in cases where the registration certificate is not received, then we say that there is nobody under MSME. So that was fair. But now what I have seen is on the invoice itself, the vendor writes that they are registered as a micro, small, medium enterprise, and they give the registration number and certificate, whatever details are there, and that is printed on the invoice. So at a later date, the private limited company, let us say whose accounts we are auditing, they cannot come up and say that I was not aware that that vendor is a MSME. He has already printed on his invoice. So I would say our responsibility as auditor has increased. We need to set up proper systems and processes at our client's place to ensure that the compliance with MSME is done. And the law is very clear that even if you have an agreement, but that credit period cannot exceed 45 days from the date of acceptance or the deemed day of acceptance. So 45, even if you have an agreement for 60 days, 90 days, we also have such issues, such cases of clients where they have, and we have requested that you please renegotiate with your vendor saying that, see, I normally give within 90 days at X rate. Now I will pay you within 45 days. So whatever is the interest cost for the balance 45 days, please adjust that in the price and get a reduction in the price and tell him that I'll pay you within 45 days, but this is the price that you have to supply. And that way it becomes a balancing act that we are doing a compliance with the law also, as well as the commercials are also taken care without impacting or significantly affecting the profitability of the client. These are the disclosures of the MSME. Everybody is aware, so I will not dwell much. Yeah, finally, coming to some other important matters. Reclassification of exchange loss. I feel that this is more for external commercial borrowings. So I'll leave that because of if you want me to take it, please ask me a question during Q&A and I'll definitely explain. Restatement of advances in foreign currency. Friends, AS 11 requires us to restate the monetary items. Now, when we give advance or when we take advance, against that normally we receive goods or services or we give goods or services. These are non-monetary items and therefore advances should not be restated. Foreign currency advances should not be restated because they are non-monetary items. Scrutiny of legal and professional expenses. Here again, I would say that this scrutiny should be done in details, irrespective of the materiality levels, because this gives a lot of insight into the contingent liability and the risk that the company is exposed to. Balance of borrowings vis-a-vis finance costs. So whatever is the finance cost and the borrowings, we should do an analytical review, because in past I have had a couple of experiences where the director or the family member of director had taken some personal loan from the bank where the company had the funding arrangement, and the loan charges, the sanction charges or whatever we say, that got debited as part of the cost in the company. So it was a private loan for which, and as you are aware, the personal expenses of the directors are the relatives that cannot be charged to the company, and therefore we have started doing this on a analytical review process of finance cost vis-a-vis the borrowings. Payments are bill by bill or lump sum on account. Friends, I would suggest you can do Google and you will find that this is one area where, as auditors, we normally don't give a lot of focus, and this area is where the frauds are identified. What is happening is, especially in case of net banking and all, payments are being made to the vendors, and let us say Mr. X, he has got outstanding. Now there is this employee Y would transfer 10,000 rupees to his own account, and now it is online, you just get the bank account details and all those stuff, right? And that 10,000 he puts in the account of Mr. X, who is actually a vendor to whom the company has to pay. Now the outstanding, that invoice amount would be 12,000, 15,000, 8,000, anything. But because he has transferred 10,000, the amount goes in that account as 10,000. And similarly, subsequent amount. Now, let us say what happens is that that vendor call up the company and ask that, that my 12,000 rupees is pending, kindly pay. Now, as an accountant, let us say the accountant, because he is doing fraud, what he will do is release a payment of 12,000 to Mr. X. But then that 12,000, he will park it into the account of Mr. Z, because Mr. X does not have that much of balance, he has already put. So what I am saying is that please do a detailed scrutiny of those payments which are either received or being paid on a lump sum basis and not on a bill-to-bill basis. External confirmations and subsequent collections, this is also very important to ensure that the receivables, payables are correctly stated and there are no frauds or one-sided accounting. By one-sided accounting, what I mean is that, the private limited company where we are auditors, they have issued a debit or credit note which the other person has not accounted, or the other person has taken some debit credit note which our client would not have accounted. So external confirmation, subsequent collections, these are a good tool to get the correct balance being reflected in the financial statements. No. Credit amounts in debit ledgers and vice versa. Again, friends, all of us know that each ledger has a particular trade. Means if I'm saying these are sales ledgers, then they would always have a credit transaction. If there are purchase ledgers, they would always have a debit transaction. Similarly, a borrowing account would always have a credit transaction and then a repayment by way of debit and a closing credit balance. So what I'm trying to say is that if you find any amounts which are contrary to these principles, kindly ensure that a detailed scrutiny is done. You will definitely find out some errors and omissions that are there, which needs to be rectified for a true and fair presentation. ICDS impact and adjustments. I normally have a separate presentation on ICDS and practical issues, but what I'm just here trying to say is that ICDS is an impact which you must take cognizant when you're finalizing the accounts, not when you're doing the tax audit, because ICDS adjustments would have an immediate impact on your current tax as well as a deferred tax. And therefore, it becomes important that ICDS impact is done when you are doing the financial statements. Cash flow statement and tax reconciliation. Again, friends, I would request, kindly put your hand on your heart and say that whatever cash flow statements you are signing, you are very, very comfortable and confident that whatever cash flow you are signing is true and fair. I will show one tool, an Excel file by which we capture a lot of things and we ensure that if not 100%, at least 95% it is true and fair. And even a tax reconciliation between a current tax and a deferred tax, we need to prepare a reconciliation to find out that there is no element that has been missed out or left out of the current tax and deferred tax calculations. CARO, these are the threshold limits which everybody is aware. I would again for CARO mention one thing. I will not go into much detail because of the paucity of time. We can have a separate session if required. But what I'm trying to say is CARO, don't feel shy of stating whatever the facts are. If a company does not have a fixed asset register, a company does not have it, and please ensure that you write in the CARO accordingly. You never know, tomorrow there might be some impact, some activity by which your reporting would come into lens and scanner. Don't protect your client just for the sake of protecting. Ensure that your signature, your COPO is also equally important to protect. I will show some examples of CARO where such type of reporting you can give. After the audit, obtain management representation letter. Friends, again, I would say don't miss out on this. Like I was a bit harsh on everybody as far as engagement letter is concerned. The same thing I would say, please obtain management representation letter. If required, we are talking of private limited companies. Please ensure that you yourself, let your office prepare a MRL, mail it to the client and tell the client to take a printout on his letterhead, sign it and give it to you. That they would always do. They would not know how to prepare. So you kindly prepare and send it. It will take not more than 10 minutes or 15 minutes, but at least ensure that you have MRL in place. Generate UDIN, preferably on the same day. I would insist on this. Please ensure that, see, in private limited companies, you can always put the date which you want to. They normally, see, I know this might be recorded, but still whatever are the facts, that they normally have meetings on paper meetings, and you can always ensure that the UDIN is generated on the same day. Please scan all important documents, keep it in file. They would be helpful in the next year. I will come to trial balance. I will mention, see, initially I'd say take the first trial balance, you might have 10 later on. But please ensure that you have the final trial balance in your file. What happens is, normally September, October, we all are completing our audit assignments. And then what happens is that we have the Navratris, we have the Diwalis, we have all the celebrations. Then winter we go out for travel, pleasure travel and everything. And we forget the audit files are kept in the cupboard as it is. My earnest request is just spend a week for all your audit clients taken together. See friends, entries like depreciation, income tax, deferred tax, remuneration to partners, share of profits. See, these are all workings and entries which are done in our office. We do it in Excel and we file the return, we sign off the financial statements, everything is done. Next year when the audit starts, we find that the opening balance it does not match with the signed financials. So my request is, and then you know what happens is if there a team member is new, he spends almost 4 hours, 5 days, or maybe 1 or 2 days, 4 hours, 5 hours, or 1 or 2 days in just matching the opening balances. So my request is that that activity can be done in 15 minutes or half an hour right now. Spend that time. It will save a substantial time in the subsequent year. Keep all original financial statements in permanent file. Raise invoice. Please do it immediately. We are all facing cash flows crunch right now in this situation with the due dates and everything extended. Don't wait. I know clients will say that Vishal bhai last year तो आप Jan Feb में invoice भेजते थे, इस बार आपने अभी भेज दिया. No worries. Make it a practice. Tell your client कि अब से ऐसा ही होगा कि मेरा signed financials आएगा, उसके साथ invoice आया ही जाएगा आपको. And you please collect the fees immediately. Friends, these are a few publications of WRC which might help you in your reporting. I have received a lot of positive feedback from members with respect to CARO and the audit reports. Please check them on the WRC website. You would find them handy. With this, I end my presentation. Like I said, we'll have about a few minutes of question answer, and then I have a lot to show you on the Excel tools that you can use. So I'll just stop share. We can have some question answers, and then again I will do my screen sharing for the Excel tools that I'm wanting to show you. Yeah. So over to Asutosh bhai and Pratik bhai. There are something in the chat box. Let me just go through it. Yeah, so the first question is there, it's to everyone, so they have seen. See, paid up capital, it includes the preference share capital because there is no such, they have not mentioned the equity word in that. So that would include everything. And if the paid up capital is equal to 2 times the paid up capital, and if the paid up capital is equal to 2 times the paid up capital, what would be the impact? I think this was with the acceptance of deposit rules. Yeah, so it is that if you have borrowings from a bank, financial institution, or any body corporate which is in excess of 2 times the paid up capital, then the borrowing from members would be restricted to only 100% of the paid up capital plus free reserves plus the securities premium. If it is less than 2 times, then you can borrow to any amount of the any amount rather. So no. In case of borrowing from members, the limit is to be calculated with respect to equity capital, whether equity capital includes reserves. No, equity capital would not include reserves. While calculating 100% limit for private limited company, when free reserve is considered, whether any effect for earlier period qualification by auditor to be considered, there is no specific mention of that. But if you ask me as an auditor, I would definitely be on the conservative side and say that yes, if there are any qualifications which would have an impact of reducing the reserves, because your qualification by an auditor would be definitely be serious, and there would be impact on the reserves, and therefore you must consider that when you are computing the 100%. How to deal with Ind AS adjustments for equity reserves? See, as far as equity is concerned, so that is where I said that they have said the paid up capital, they have said the free reserves. Now, whatever comes under the equity component, what we typically say, the SOCI, statement of changes in equity, and the other equity, you have to see that whether it is a free reserve or not. If it is not free, then it would not be considered as part of that computation. Whether MSME interest to be paid for medium enterprises. If we look at the language of the Act, it talks about micro and small. It does not consider medium. And therefore, going by it, I would say it's only for the micro and small. Though the Act is micro, small, and medium, but as far as the interest payment is there, it is for the micro and the small. Is it mandatory to give IFC report based on previous audit report even if criteria is not met in current year? See, as far as IFC is concerned, there are no such transitional provisions, so you have to take on a year-on-year basis. So if the criteria in current year is not met, you may not give the IFC. LLP converted to private limited in middle of the year. Till June, business done under LLP and later in private limited. Till June in LLP turnover is 86 lakhs GST, and private limited turnover is 158 lakhs excluding GST. Statutory audit.
balance sheet is बनाओ ना.
Question is whether statutory audit is to be made for private limited only. Yeah, because see, the entity has undergone change. So I honestly, if you ask me, I don't remember the exact threshold limit. The turnover, I think so, it is a 5 crores, right, for a LLP audit. So if that threshold is not met, then audit for LLP is not required. And so you have to look, because these are two separate entities, and you have to look for each entity separately. Two tax audit will be prepared for income tax compliance. You will have to do two tax audit, because as it is, the PAN of both the entities would be different, and the compliance also for both the entities would be different.
Hello,
So
sir.
you have to look into each entity separately, LLP separately, and private limited separately. And if each of the entity, whatever threshold, whatever criteria it meets, you will have to do the compliance. So if I look over here, that for LLP, the turnover is 86 lakhs, and therefore it would not get covered under tax audit. I feel even under the new regime of 5 crore, even in private limited, maybe tax audit might not be applicable. Then, but you have to. What I'm saying is that you have to look at both the entities independently. Yeah, there was somebody who was wanting to say something.
Yes, sir. Can I put the questions out, read out the questions for you, and you can answer it now?
Yeah, sure. Because I feel it's already there on the chat box, which is, and it is to everyone. So fine, whatever you can read out, no problem.
Okay.
Please.
The first question is, once non-SMC becomes SNC in any year, then you said that for 2 consecutive years after becoming SNC, the SMC company will not enjoy the exemption of SMC. So for those 2 consecutive years, the disclosure is to be done as applicable to non-SMC or SMC.
Non-SMC. So it would still be considered as a large company, that is how I would say. And therefore, all the applicable disclosures as for a large company would continue for 2 years after becoming 2 consecutive years after becoming the SMC.
Okay. The second one is whether any note to be given in case director gives loan to company out of his borrowed fund, or whether the amount is to be qualified in our report.
See, in such a case, you have your CARO, which is applicable, right? Where you say that the company has violated the provisions of section because it is not an exempted deposit, and therefore it is violation, and therefore in CARO it should come. Now, let us say CARO is not applicable in case of that company, then you should definitely use your main audit report to bring out that non-compliance.
Okay. The next one is how non-convertible secure deposit is not a deposit.
Non-convertible
Deposit, a non-convertible secure deposit is not a deposit.
I think no. What we were talking about was debentures, right? So debentures, if they are unsecured, then they would be exempted deposits only if they are compulsorily convertible. So unsecured debentures, compulsory convertible, exempted deposit.
Okay.
If the debentures are secured, then you can have them as compulsory convertible, non-convertible, or optionally convertible. Any of that, as long as they are secured, they would be under exempted deposits.
Okay. Whether transactions with director or relative required any prior approval of board or shareholders.
Direct transactions with director under related party, yes, you should also go through the standards on audit on related party. So I see normally in private limited companies, there are a lot of these exemptions which are there. But if I look from a corporate governance perspective, though the corporate governance, what we say is in case of listed companies and all, but especially in case of private companies, whether they are at arm's length or not, because see, even when you go under your tax audit, you would be saying that, under your 48(2)(b, that these are the items, and you will be disclosing everything. So it's always better to have the board resolution for that. And another thing, if in a private company is not a family-owned company, what I'm saying is there are 2 friends who have formed, or there are 2 cousins who have formed. In such case, also it is a good and healthy practice to have all these things monetized. Tomorrow there should not be any fight between the 2, and then somebody comes up and says that you have taken this loan or you have drawn this salary which was not approved, and all those things. That should not come up. It should be by way of a board resolution. So then you are saving yourself as an auditor.
Okay. The next one is optional convertible debentures issued to holding company. Will it be considered as a deposit?
Optionally convertible debentures to holding company.
Holding company. Huh.
In my opinion, no, it would not be considered as a deposit.
Okay. The next one is if transactions are with directors of holding company, that is the non-convertible debentures that is issued for more than 10 years. So what will be the impact of it?
It would be violating the acceptance of deposit rules.
Okay. The next one is in an audit, how to track all the transaction with holding, subsidiary, associated and joint venture companies.
See, one thing is that with respect to, if you see the ROC compliances, that whenever you have a holding subsidiary, or see, first of all is how to identify the entities. That is, I would say first. So you have to look into all the investments. When I talk of the asset side, whatever the company, private limited company has made investments in other entities, you have to scrutinize that. You have to see, take memorandum articles. You have to see from that company's website, and whatever details you have, there would be MOUs, there would be agreements and all these things. So you have to first of all identify the companies, whether they are joint venture, associate, holding subsidiary, whatever it might be. So that is the first exercise which you need to do for all the investments that are appearing. Second is that you have to go through the board minutes also, board meeting minutes and everything, where they would have granted approval for making such investments. Coming third is the transactions. What you have to do is that you have to go through the ledger, because then there would be these vendor accounts. I'm saying now the business transactions, not the investment transactions. Investment transaction already discussed. When you talk about the business transactions, then what you have to do is that you have to go through the ledger accounts of the vendor accounts and the customer accounts, deposit accounts and everything, and do a search whether there are transactions with any such entities. If there are transactions, please ensure that you obtain a confirmation also from of our company in their books of account as a cross confirmation, and see then this is how you should track the investments and then the transactions with such entities.
Okay. The next question is management evidence for ICFR, which they declares in director report. What documentation management should we maintain?
I would say first that what documentation as an auditor you would be maintaining. That will be first. See, in director's report, whatever the director comments, as an auditor, if you ask me, I would not give much emphasis on that, because if I have to give my report on IFCFR, I have to do my role and responsibility duties as an auditor to give a report under IFCFR. I cannot say that just because the director has given a clean report, on that basis I would also give a clean report. That is not at all permitted. So IFCFR is another area where, I would say it is a professional opportunity for all of us, and as well as it is a responsibility also. So we have the ICAI guidance note, which is excellent. There are a lot of illustration Excel files also in that. I would request all members to kindly refer to that. They have a full risk matrix that, what are the assertions. That I'm giving a simple example, that if cash is not accounted, then what are the implications, where are the implications, what can go wrong. So all those things are very detailed and elaborative given. You can take that as your template, put it for your client, prepare such a risk matrix and a risk assessment documentation for your client. So first is that. Once that is in place, when you do the audit on a sample basis, you should check that whether all those assertions, whether all those processes are being followed or not, and then you should give your IFCFR certificate. In fact, I would say it's the reverse way round. Rather than the auditor relying on the director's report assertion, it is actually the director's assertion which relies on the auditor's report, that if the auditor has said that IFCFR everything is proper and there are no major deviations, and then the directors are much more happy and comfortable in giving in their director responsibility statement that the IFC is in place and working fine.
Okay. The next one is if companies has not received export proceeds in prescribed time limit, how to bring it to the audit qualification?
No, see, what I understand is that if it has not come within that, first of all, you have to understand as an auditor that why it has not been received. Are there any quality issues, or see, I'll be very frank, all our members, that whether actually there is a round tripping or some sort of a transaction by which, paisa pura, the money was to be circulated, it has not been circulated. There are provisions under FEMA also that if you have not received in time, you can go to RBI and you can seek approval, you can seek permission for extension of time. So you have to look into all these aspects. If there is a compliance, they have gone to RBI, then there is no such need as such of a qualification. Second thing is that I understand that without approval from RBI, you should not write off any of the foreign currency receivables, trade receivables or whatever it might be, because then that faces a lot of, you may take a provision against it, but you should not write off such receivables unless a permission from RBI has been received.
So there is no further queries as such.
I have a query, sir.
Yes.
Sir, that was a query that LLP converted to private limited. In that, the first question was whether I should make only one statutory audit, because what the ROCE compliance is saying that we cannot upload a stat audit report of a LLP right now, because all the everything is converted to private limited. So we can only upload ROC compliance for private limited. So should I make it? You said you should make 2 audit reports, considering it two entities.
Yeah, I would just ask, for understanding, I would just like ask a counter. Let us say hypothetically that the private limited is subject to tax audit.
Yes.
And the private limited is also subject to tax audit. Then how would you have done the audit?
Tax audit will be done separate. That I consider it. But for the stat audit, I'm getting confused.
My question is that in tax audit, why I'm saying some things are becoming very interesting is because tax audit, whether you will give 3CA or you will give 3CB.
In both cases.
See, why I'm saying such thing is I understand and appreciate that these are some tricky issues. There are some procedural requirements that are there. If you ask me, LLP being a separate entity, though it gets converted,
yes.
Right? See, there is nothing like a merger or an amalgamation, right?
Yes.
So this is being converted.
It is just a conversion.
So my personal view would be that as far as the audits are concerned, you should have, because when you convert from private limited to LLP or LLP to private limited, what I understand is that you have to prepare and extract a statement of assets and liabilities as on that cutoff date. And that has to be uploaded, right? Yes. So when you prepare that, along with that, you will give your certificate, sort of an audit report or whatever you might say.
Yes.
That is required.
Yes.
Right. So once that is required, that means to that extent you have done.
Yes. Till that extent I have done. And I have prepared, Yannick. I have prepared the statements. Hello.
Vishal sir, are you there?
Hello.
Seems to be some network issue. Sir will be right back.
Yes.
On the audit till that particular point in time. Audit.
Sir,
sorry.
Yes,
can you just repeat the answer? There was a bandwidth problem from your side. Can you just repeat the answer of Mr. Punk?
Sure. What I was trying to say was that, when we talk of a private limited to LLP or vice versa.
Okay, yes.
Right? As when the conversion happens, at that point in time, we already give a statement of assets liabilities.
Yes, sir.
Which is certified.
Yes, sir.
So if I want to look at, and that gets uploaded on the MCA, and that brings about a cessation of that particular registration as far as MCA is concerned.
Yes, sir.
So when I'm giving that asset and liability, that itself would mean that till that point in time, I have done my audit.
Yes. Yes,
And then
sir.
only I would give the statement of asset
Yes.
liability.
Yes, sir. I would be able to give that. Yeah, barobar.
And
Yes,
that
sir.
you have already uploaded on the MCA website. Therefore, post March. So let us say in that example, it was April to June and then July to March.
Yes, sir.
So from April to June, I've already uploaded. It is done as far as MCA compliance is concerned. From July to March, whatever is the new entity, LLP or private limited, I would do only for that 9 months and applied for that 9 months only.
Okay.
So
Yes, sir.
post March, I don't have to file for the first 3 months because that I've already uploaded at the
Already
time of
filed
conversion.
due. It was required for conversion. So I have already
Exactly.
provided that earlier. So we don't have to provide it again. And secondly, for the private limited, we have to prepare it for 9 months.
Exactly. Exactly.
Thank you, sir.
So the next question is, in CARO 2020, loans to employees, is it covered under loans and advances in the nature of loan clause of CARO?
See, honestly, I have not focused much on 2020 because it has been fortunately postponed by 1 year. In fact, I remember Asutosh Bhai, if I recollect, he had suggested CARO 2020. I said I will not take CARO 2020 because I don't want to confuse members with CARO 2020 right now. Because we are into CARO 2016. Let us focus on that and do a reporting under that. CARO 2020, once this season is over, then we will definitely have a very detailed presentation on that because there are a lot of new clauses under CARO 2020. So please pardon me for that, for not responding to that query, but presently I would like to keep that in abeyance.
Okay. The next question is internal audit points of CARO, whether auditor is required to consider effect of all undisposable point of internal audit, that is unredeemable points till March 2021.
See, if again I would say CARO is in addition. See, CARO is more of a procedural aspect. We don't have to report on so much of the effectiveness of internal audit. But yes, if the internal audit, if the internal auditor has missed on certain aspects of revenue, cost, or whatever which might have an impact on the financial statements, then as an auditor, I should not wait till CARO. I should get that thing solved immediately as far as my financial statements is concerned. Because like I said, it is the responsibility of the management to prepare the financial statements and ensure proper compliance with the accounting standards. So if the management has not done, if the internal auditor has not done, or internal auditor has reported, but the management has not taken cognizance of that, then as an auditor, if it is a material deviation, I definitely have to qualify, not on the internal audit point, but I have to qualify on my external audit report itself.
Okay.
As far as the scope, what I understood, if point is identified by stat auditor, not by internal auditor, whether scope and see, as far as that is concerned, again, you have the standards on audit, which talks about relying on the work of an internal auditor. So in such cases, you have to identify what if the internal auditor has missed that particular point, which the statutory auditor has identified. What was the reason for it? Was it that it was not part of the scope itself? Or was it that it was part of the scope, but the internal auditor has not been able to bring that out? In either case, I believe that the statutory auditor should have an interaction with the management because the purpose of internal audit is such, and maybe even sit with the internal auditor. See, many times I have seen many companies where we audit the management, the company does not want to duplicate the efforts. They don't want that the internal auditor and the statutory auditor should be doing the same thing. So, you have to understand the scope and maybe if required, subsequently revise the scope also.
Okay. So the next question is again related to CARO 2020 actually.
I can understand, yeah.
Whether bank confirmation format should include CARO 2020 requirements like periodical filing, willful defaulter, etc.
Yes. See, if you ask me, I'll just give an overview that CARO 2020, we should not, I'm saying everybody, as chartered accountants across the country, we should not wait till March end and April or our next audit to start. Once this is over, we should immediately gear up because there is a lot of requirements that the company's management will have to provide it to us. And doing it at the last minute would become extremely difficult. There would be a lot of formats also which would be required to be done. To be prepared well in advance, and therefore, yes, we should start on it much before. So the question that has been given, that whether the format should include requirements like periodic filing, willful defaulters, all those should definitely be included, because otherwise we would not come to know. And it's only by way of such representations and confirmations, external confirmations or whatever, that we would be able to fulfill our reporting requirements.
Okay. The next one is whether Section 135(5) of Companies Act is notified related to CSR.
135(5), sorry?
Of Companies Act is notified related to CSR.
Section, I'll have to check that. I'll check that and get back.
Okay.
I don't remember so much in detail the subsections and everything, the applicability, but I'll definitely check and revert back. So Mr. Rajan, you can just WhatsApp me your number. I'll check that and I'll revert back to you.
So there is no further queries in the chat box.
So I would just ask the conveners that if you permit, can I have a short 10 minutes, 15 minutes of the Excel files?
Definitely, sir.
Let me tell the audience, I thank you for your participation. In case you feel you would like to leave, feel free. No problems at all. We have already overshot our time. But I must thank that it has been an excellent session. I have also learned a lot, and I'm very happy with the questions that have come up. So now I'll again go to some screen share about the tools. I hope a folder is visible, right?
Yes, sir.
Yeah. So I'll start with materiality. You don't worry, BSF files, I'm not going to show each and every file. So see, this is how what we follow in our office with respect to the deciding the threshold for materiality. This is as per the standards on audit. All these amounts are in lakhs. So you see, these are the 4 criteria that we have taken, or I have taken in this example. We are talking for March 20. So these are March 19 and March 18 numbers. Last 2 years, we have taken the average. And then we have applied a judgmental percentage as to what can be, because of the numbers, what can be the percentage that can be applied to this average. So for total assets, 0.5%, for PP plus intangible, 0.5%, revenue, 1%, profit, 3%. And these are the numbers that are extrapolated. Now, we all know that we want to minimize the risk of material misstatement, right? So what we do is that out of these 4, whichever is the least, whichever is minimum, we take that is the materiality for us. I'll just show this. Right now, we know that we are going to do sampling, we are going to do a lot of test check, and therefore there might be chances of errors, omissions by our audit procedures. And to further minimize the risk, we bring this 5 lakhs down by another 25%. So here I have taken a performance materiality of 75%. There is no standard norm. Even for these percentages, there are no standard norms you can take based on your practice as per your experience. But my suggestion is, as a firm, you should take same. So it should not happen that in one entity you are taking 2% of turnover, in another you are taking 1%, somewhere you are taking 3%. That's not, you should have standardized. Now, this performance materiality to take anywhere between 50 to 90%. I have taken at 75%. So 3.75 lakhs is my materiality threshold. So anything, either individually any transaction or all transactions taken together, if they exceed 3.75 lakhs, then I have to ensure that necessary corrections have been made, or if corrections are not made, then I have to draw a qualification in my audit report. So 3.75 lakhs is the threshold. Now, we had a materiality of 5 lakhs. So I take 1% of that, which is coming to 5,000 rupees. Now, what is this 5,000? Again, this can be anywhere between 1% to 5%. I have taken 1%, which is the least. So 5,000 is such a small amount, is such a trivial amount that anything below that, we should ignore for the purpose of our vouching, for the purpose of our scrutiny and all those things. Because when I say 3.75, that means if I have 75, at least 75 transactions of 5,000 each, then all of them would add up to 3.75 lakhs for me to cross the threshold materiality. Now, having 75 transactions of 5,000 each or less than that, then I'm talking of a larger number. is something which is very, very improbability, right? Because if that is the case, then the whole books of account you have to do 100%. You can't then do any sampling into it. So what I'm saying is that I put a threshold of this 5,000, and I tell my team that don't pick up any voucher which is less than 5,000. Don't write any queries which is less than 5,000. And we save a lot of time and we bring about efficiency. And like I said, this was a part of my before the audit slide. Therefore, before you start the audit, this materiality based on the March 18 and 19 numbers you should have, and you should discuss with your team. This will save a reasonably good amount of time and bring about audit efficiency and quality. So that was with respect to materiality. The second was with respect to limit evaluation, where I said that there are so many laws. See, this sheet itself would be very alarming for you. I said I don't remember the threshold. मैं तो भूल ही चाहता हूँ, to be very honest. If anybody over here says कि उसको याद रहता है, I feel that person should be given a medal. Now I am just giving, if I look over here, that these are what we have identified. This is a sheet which we use common for corporates as well as non-corporates. So whether it is SMC, yes or no, level 1 non-corporate, level 2, level 3, then Companies Act की requirement, if you see, आपको भी पता नहीं होगा इतनी requirements है. CARO, whether it is small company, internal audit, cost record, cost audit, XBRL, secretarial audit, and this goes on and on if you look at it, right? So now how do I ensure compliance with each of them? So I'll just take an example. So on the left is the criteria which we give, that whether it is a company or a non-company. So if you see, मैंने non-company में no दिया है, तो यहाँ पे automatic मेरा level 1, level 2, level 3 जो है, वो मैंने not applicable हो गया because it is a company. Non-company no means it is a company. Then we have a private limited, this, all those things, right? Now I am just taking one threshold of with respect to SMC. SMC, if you remember, we discussed that the turnover in the immediately preceding year should not be more than 50 crores, right? These amounts are in lakhs. So now यहाँ पे आप देखिए SMC जो है, इसको SMC yes है. Now the moment I exceed by 50 crores, this becomes no. So this means that when I do the audit, I have this criteria ready, तो मेरे को पता चल जाएगा कि ये SMC नहीं है, and therefore all these standards are applicable in this situation. If I look at the borrowing CARO requirement, so CARO says that loan in more than 1 crores, then CARO would be applicable. So let us say I do अभी CARO no है. Over here you must have seen. I'll undo this. CARO no है. The moment I type more than 1 crore, ये yes हो गया. So this is how we keep a tab. We fill up all these details. In fact, मैं सही बोलूँ, ये सब details जो है ना audited financials से हमारे ऑफिस में articles students भरते हैं, and the team audit manager they just review. So this saves a lot of time and cost of us collectively, and we ensure that जहाँ पे जो भी compliance है हम लोग proper कर रहे हैं. As an auditor, we are ensuring a proper and true compliance with the requirements. So that was with respect to materiality threshold. Then cash flow ka. This is our cash flow master. Current year, previous year. अगर आप देखें, sorry for speaking in Hindi. Sorry, Mr. Rajan. This profit and loss before tax, this is linked with the statement of P&L. Then we make adjustments. So these are all the adjustments in the cash flow. So we write here also whether this should be a positive figure or a negative figure, because you must be aware dividend income, interest income, and all those things. It is taken away from operating activities and it comes as an investing or a financing activities. So from here it would get adjusted. So these are all linked to the financial statement. So when we send this Excel file, blank file to our client, this gets embedded, incorporated in the Excel file which contains the financial statements, and then this is plotted. And so all these get linked to the financial statement. The advantage of this file is that any changes also subsequent to audit and all that we do to make necessary adjustments true and fair, the moment the changes are done, automatically this sheet also gets changed, and my cash flow is, like I said, 95% I can assure is true and fair. In fact, honestly, earlier the clients used to come to us with a cash flow which was not tallied, or even if they tallied, they used to tally it anyhow, and they would give it to us. And when we used to link the figures with the financials, we could not trace out those figures. Now with this format, this tool, we are ensuring that work becomes much easy, smooth and accurate for all of us. So these are all amounts which get linked to the financial statements. So that gives us the operating cash flow. Then these increase, decrease in the assets and liabilities. These are working notes in the next sheet. So if you see unrealized, so these are the amounts, which you cannot capture directly from the balance sheet itself because there are adjustments to be done, and therefore these are working notes. So inventories, opening, closing, if there is any provision for diminution, this is a non-cash item and therefore this needs to be adjusted. Trade receivables, again, if there are year-end restatements in case of foreign currency, that also being a non-cash item, it needs to be adjusted separately. Provision for doubtful debts, again a non-cash item, it cannot be part of the cash flow, it has to be adjusted. Loans and advances, like advance tax, the cash flow, there is a requirement of showing direct tax payments. These are all the elements that are required, and these form part of the working sheet, working papers. And from these numbers get automatically linked to the main cash flow. It gets linked over there. If you see over here, workings D17. So inventories movement comes captured from there. So this is how all these workings come. And we have given comments, remarks wherever it is there. Finally, you have the cash flow over here. What is the net increase, decrease, which is the summation of your operating, investing and financing activities, your beginning of the period, end of the period, and then these difference. So this difference must be zero. This is what we see over here, and so this is how we ensure a proper compliance with the cash flow statement. Sorry friends, I'm moving a bit fast, but I know you are all very eager to have your lunch. Deferred tax. Again, this sheet is a control sheet that we have. Thoda chota karta hu so that you can see it in a single. Yeah. So we internally call it a ETR format. So this is the normal computation of income which we prepare in the Excel file. This is my opening deferred tax details. These are my closing deferred tax details. So your opening minus closing is your deferred tax movement for the year, right? Now what we do is that these numbers are plotted independently, these numbers are plotted, and then these are linked. So if you look at the depreciation numbers, depreciation as per Companies Act, depreciation as per IT Act, if there is any loss on sale of asset or whatever, all these numbers are added. And the difference between the two WDVs, opening and closing, between the Companies Act, IT Act, that difference is plotted. Now the difference between these two is there is no difference. That means my current tax and deferred tax for fixed assets is matching. See, many times this difference come, like it has been written over here, WDV of previous year of income tax was wrongly taken. So in this particular case, what might have happened in the preceding year, when we did the computation for balance sheet purposes, there might have been some error in considering more than 180 days, less than that half rate, full rate under income tax, or some classification issue by which, but that got corrected in the final return of income. So there is that mismatch, financial statement signed off. So this would get plotted as a permanent difference. Similarly, so you have 43B, these are decommissioning liabilities and all. Then you have these leave encashment, the difference in that. My balance sheet, whatever are the carrying amounts, closing balances of liabilities, I match that, I plot that. And there is no difference between what is the movement. See, this over here, this captures the year-on-year movement, and in computation also we are supposed to capture the movement during the year. So that is what gets captured. So there is no difference. Profit, sale, loss on investment, short-term capital gain, long-term capital. This becomes a permanent difference because I am not going to create a deferred tax asset on that, and therefore this comes as a permanent difference in this working. So donation also, I don't create a deferred tax on that. There is a difference as far as the tax rate is concerned, but no deferred tax. Therefore, this is a permanent disallowance. So this is how we map every element, and this number we take the tax rate which is there for non-tax. This is the tax rate for my deferred tax. Now, what is the difference for the tax rate? That also gets quantified and reconciled. This amount, if you see, link this amount with opening DTA DTL in balance sheet. So this is my opening DTA DTL as per the balance sheet. This is my closing DTA DTL in the balance sheet, and this amount is the amount which is the amount that would be as a deferred tax in my profit and loss. So this is what would go as my profit and loss. Now, how do we do the reconciliation final and get that comfort? So this is what is my profit before tax of 45 lakhs. This is the number for here. I have a tax rate of 33.99%. So as per that rate, my tax, current tax plus deferred tax should come to 15,29,000. But what I am getting, 6,79,000 is my provision for tax. Now this company is under MAT. If you see, my normal tax liability is 492 because there was a brought forward loss of 50 lakhs. And my tax liability under MAT is 679. So this is under MAT. So there is a provision for MAT of 6,79,000. But deferred tax, there is a income, there is a reversal. If you see, this is my opening balance, this is my closing balance of deferred tax liability, and therefore this is 8,37,000 is my income. Therefore, I would show over here that I have a MAT credit entitlement, which I would take as a difference between my normal tax and a provision for tax. And this 18 lakh of difference is basically because of this permanent difference. So we had a permanent difference, all these amounts in this column I, that applying the tax rate on that, it comes to 1874. So when I sum up all these elements of the tax, my final amount is 0, which gives me a comfort that my total tax, that is current tax plus deferred tax, that adds up to a number which is matching with my tax rate of 33.99%. I have been able to reconcile all the elements of my tax rate. So this is what we say as the ETR. I'll go to CARO Master, just where I was saying that in some cases we have to give a statement of facts. In fact, this is also what we have in our office as a template. If you see, this goes into what almost 250 line items of reporting under various clauses, various, I would say, options of reporting under various clauses. And if I look at the, I'll just take some which I have identified. Like, see, fixed assets I was saying. So in this, we report that the company is in the process of updating fixed assets record to show full particulars. So if the FA register is not there, either you give an adverse remark that it is not there, or if you want to dilute, you can say that the company is in the process of updating the fixed assets register. The second is that, if the company has maintained full particulars, but tagging has not been done. So you have an Excel file or whatever, you have a FA register, but you don't find the tagging in the fixed assets physically. So you see here it is said, we are reporting that the company has maintained proper records, including quantitative details and so and so. Except in case of certain assets where item-wise particulars and tagging of fixed assets are in process for updation in the FA register. See why these things become important, because God forbid, tomorrow let us say there is some insurance claim, there is some fire or something, and then you find that there is no asset tagging or nothing, and the insurance company saying that the assets are not there and FA register is not there, they are not mapped. Then in our CARO, if we have given a clean report, then there might be a difficulty that we might face. Adverse, then see, here also, the company has a regular program of physical verification, which is reasonable. The assets which were to be covered as per the state have not been physically verified by the management during the year. This can hold good, especially in the COVID situation, because March end, if any client of yours was planning for a FA verification but has not been able to do, you can still give in a positive way that they do have a program for verification, but they have not been able to cover. And as the management has not carried out any verification, we are unable to comment of the discrepancy. So as an auditor, you are making your side very clear about these. So these are various ways. I will not take much time, but I would suggest, I have shown some WIRC publications also. Please go through them and ensure that whatever we report as an auditor is true and fair. And we don't report something which, it becomes difficult for us to justify at a later stage. These are various checklists and all. We have a lot of such things in our office. I would not, we have already touched 12:30. So I will not take more time. These are some of the files which I wanted to share. So thank you, Ashutosh bhai. Thank you, Pratik bhai. I really had a great fun. Over to you, sir.
Vishal, some members are asking for the PPT. Will it be shared?
Yeah, PPT I'll share. I'll mail it in a couple of days.
Okay, sir. Thank you very much, sir. Now I request Ashutosh Trivedi, sir, to please do the further proceedings of the session. Ashutosh, sir, over to you.
Thank you,
Ashutosh,
sir.
sir?
Yes, yes. Thank you, thank you. Now on mute. Thank you, sir. And I thank you from the bottom of my heart for accepting our invitation. And it is a very great honor and privilege that you have addressed today's session and educated our members on aspects of company's audit. Uh, Hello?
Yes, sir, we can hear you, sir.
Yes, yes.
Okay. And as far as, sir, this today's session is concerned, I can assure you that entire history of our study circle, as far as this company's audit is concerned, this session is going to be an immemorable session, and it will be remembered forever for the value addition which you have done, sir. Thank you very much, sir. Actually, I apologize because I was not able to join in the beginning. I had
No problems, Ashutosh bhai. वो सब अपना है. It is inherent with this technical world, so no apology. Even I had to also break away because of some network issues at my residence. So that's part and parcel of this webinar. So no issues. Friends, I would just on a parting note say that please do not consider any audit, irrespective of the size, lightly. We are in a situation where each and every audit is going to be looked through the microscope, and we don't know what the future has in store for us or our client. And therefore, the more that we have set up proper processes within our office, like we say, charity begins at home. I would say that even the internal controls. I give a very simple example. I'll just take a couple of minutes. We talk of standards on audit and everything. I'll give a very simple question. I'll ask all our friends over here. We go to a client's place for audit, and when we go there, for each voucher, for each entry, we say that you give this supporting, you show this contract, you show this, you show how, what is this, and we ask a lot of questions, right? And then we satisfy ourselves, and then we give an audit report. How many of us have actually read in the audit report what are we actually certifying? With respect to standards on audit, with respect to other compliance. Now, if let us say as an auditor, I know you would know, nobody would have to take that risk of calling me to audit your audit reports. But what I'm trying to say that if as an auditor, I would just request you to do a self-introspection, pick up an audit report with CARO and everything. Forget CARO, I would say just the main audit report under SA 700 that you issue. Pick that up, read through each and every paragraph, each and every sentence, and ask yourself that if tomorrow somebody comes and asks me that for this audit report, this statement which I have done in the audit report, if they ask me for a supporting, whether I would be able to provide that. The day you say that for the whole audit report, yes, I will be able to provide the necessary supporting to whosoever comes and checks this particular audit file, I'll tell you, you will be the most successful auditor in the country, and I would go a step ahead. You would be the most successful in the world also. We just need to do that. The audit report, we read the audit report and we do the self-compliance. That itself would ensure that as a fraternity, as chartered accountants, nobody would be able to point any fingers on our audit processes. Thank you, friends.
We are also very lucky to be joined by Dr. Rajkumar Adukia, sir, and the chairman of our branch, Ankit Agarwal. And
my pleasure, sir.
And there is another benefit. So Mr. Sundar Rajan, if he is with us, so right from Chennai, he's been able to join thanks to this incredible technology. So Mr. Sundar Rajan, are you with us?
Yes, sir. I'm there, sir. I'm there.
Yeah, would you like to express your thanks?
Yes, sir. It was a great session. Actually, it was a very good session for me. It was a great taking from this session. Nice, sir. Thanks a lot for this session on a holiday, sparing your time for us.
So it's always a pleasure, and I please pardon me that in between I spoke in Hindi, which you were not able to understand. My apologies, sir.
No problem. No problem. It was a great.
I would request Sir Rajkumar Adukia, sir, to please say a few words, sir.
Thank you, Ashutosh, Patik, and dynamic chairman of Kalyan Dombivali branch, Ankit, Sundar Rajan ji. You know, the benefit of joining even for some time, I joined for some time in the later part, And that time Vishal was saying that there is a material on WIRC. I went to a WIRC website, 701, 705, 706, and there was a whole list of checklists. Then I went to Vishal's firm's website, because this firm I had been visiting for last 30 years, maybe more than that, because I am active in the council since 1991. First time when I contested WIRC. So KC Mehta Saab, the founder of the firm, and it is an institution. Whenever you will have a time, when you are visiting Vadodara, do visit this firm. You will see the kind of motivational things which are written, and the meeting rooms are like Nalanda and things like that. So the Milind, his senior partner, is a visionary. All partners are visionary, like I see more than team of 15 plus partners. And Vishal, hats off to you. And what friend he said to us, say one audit if we do systematically, the following, if we create a checklist for one audit, all standards on auditing, and what sir was saying, MRL, which now we call written representation under SA 580, SA 210, the engagement letter, and the checklist, it will save our time. I was thrilled when Vishal said, the article trainees filled, that should be system in our office. And this documentation is our audit tool. What he was saying, do we read? Suppose in a company's auditor's report, if we say that ICAI accounting standards are complied with, the reading itself will tell, that auditor has not applied the mind. Because ICAI accounting standard is for the non-corporate body. For the corporate body, we have two set of standard. The company's accounting standard rules 2006 for the small companies, and companies Indian accounting standard rules 2015 for the larger companies. And reading, each and every requirement, the chapter 9, the rules, we can do an amazing work. I myself, in my practice of last 37 years, my firm was called by CBI, Economic Offence Wing, because whenever we give a report, in one report, there was a charge certificate given by us. And that charge was not at all registered in ROC. We had the record, when we had visited, when we had paid the fees, the whole note was there. Similarly, in one stock audit, we were called by EOW. And they said no stock is there. When we had done the stock audit, the stock was there. So we told them, on this date we had visited, this was an employee, this was the stock, this is the quantitative list. So the audit is not at all risky. Sometimes we say audit is risky. If we follow the technique of auditing, the science of audit, say I decide a sample, I'm just taking 2-3 minutes. I take a sample of 50%. In another 50% transaction where the sample is not taken, there is a fraud. I did all my due diligence, and not a single red flag came in my 50% transaction checking. I will not be held responsible for the fraud which is not detected by me, because I followed SA 240. I did all social media, this thing. So Vishal, what you have done, I was interested in attending the session because I think you addressed at JB Nagar, or you are going to address. So I sought this opportunity today to hear you, and that gave me a benefit of the literature on WIRC website, which, you have put the effort as a chairman. So heads off to you, what work you are doing as a vice chairman, and the whole team, Lalit Bajaj, and the whole battery of 22 regional council members. And the Bhiwandi Study Circle, heads off to the Bhiwandi Study Circle. For those who stay in Metro Bombay, we feel Bhiwandi is in one corner. But the quality of the study circle discussion, and Sundar Rajan who is attending from Chennai, and the Ankit, what he is doing at Kalyan Dombivali is amazing. And Vishal, you must be seeing when you compare 35 branches performance and maybe 100 study circle performances. So Asutosh and Pratik, please keep it up. Thank you so much. Ankit, keep it the branch activities.
Thank you, sir. Thank you very much. And surely your encouraging words will always motivate us to do
And
more.
you have a member like Shraddha Agarwal. I was talking to, she wrote for the Kalyan MSME. She's there, as a participant. I could see her name. And this Kalam mission, heads off to you, Ankit. Thank you, Asutosh. Sorry.
And I would like to say that I am feeling really blessed that I have a team of young and dynamic members. I have a co-convener, Pratik, who has handled exceptionally well when I was not there. Shraddha and Sakshi are doing very well. And the chairman is, of course, he's having very brotherly relationship. He's always there to energize us. Now, few words from the chairman, please.
Ankit, please unmute.
Yes. Yes. Thank you, Ashutosh bhai. Am I audible?
Please,
Yes.
Yes,
Dear, yes, dear professional colleagues, a very good afternoon to all of you. Apologize that I could not join in the beginning because one of our member of the branch was infected COVID positive and I was managing the hospital formalities. So I could join for the concluding session. At the outset, we are very thankful to Vishal Doshi sir for his excellent session on companies law, audit of private limited company in CARO Compliances. Sir, in a very lucid way and with a detailed analysis, you have made us understand the CARO Compliances, Schedule 3, forms to be filed, checklist for loan, accepting deposits, fixed assets, precautions before the audit, during the audit, after the audit, and many things. Sir, Vishal sir has been instrumental in the activities of WIRC and he is always coordinating with us even for the branch and the WIRC activities. The WIRC has been very vibrant and Vishal sir is playing a very good role in it. I also acknowledge the role of the chairman, Lalit sir and Murtuza sir, the secretary and all the WIRC RCMs. Sir, we are thankful to you for your dual role. First as a vice chairman in WIRC and second today as a speaker at our Bhiwandi CPE study circle. And sir, hats off to you for your commitment that you are serving even as a speaker to all the study circle and branches. We can see that managing WIRC and then managing our office and then managing as a speaker in our CPE and this regional council and branches. That is really a commendable job. Thank you, sir. Thank you very much. I also congratulate the Bhiwandi CPE team, Ashutosh Trivedi, Pratik, and all the young and dynamic future leaders who have kept a 2 session on company law series. Friends, in this COVID time, we have seen a record of companies incorporated during this lockdown period. And first, we used to think that in Bhiwandi, there are traditionally proprietor firms and partnership firms. But now we can see many corporate companies, LLPs being incorporated in Bhiwandi. And we professionals have a great role to play. I also acknowledge the presence of our senior member and member of Bhiwandi CPE Study Circle, past Central Council member Rajkumar Adukia ji. Thank you for your encouraging words, sir. I also acknowledge the presence of all the senior members and the members of Bhiwandi CPE Study Circle. Thank you very much, sir. And Vishal, sir, we will be very glad to listen you on CARO 2020 next year. Thank you, sir. Thank you very much.
Thank you, Ankit, for those kind words. I would say that it is the love and affection that I get from all of you, which gives me the energy to work multifold. And you don't feel tired because you get a lot of love and affection and support also from great leaders here like you, Rajkumar ji, Asutosh, Pratik, and everybody over here. Thanks a lot.
Thank you, sir. Thank you very much.
Thank you very much, sir, for the wonderful session. We under the Bhiwandi Study Circle loved your seminar. Thank you very much, sir. And for the CARO Compliances, we also need you in the future.
Sure, sir. Anytime.
We confirm the speaker will be only Vishal sir.
Very shortly to work office since my home is very near to sir's office actually.
Most welcome. Sir. Okay, thanks a lot.
Okay, sir. Bye, sir.
Bye-bye.
Bye, sir.
Thanks, and we declare the session to be concluded. Thanks for joining, everybody.